You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music can mean only one thing. It is time once again for the little engine that could, the show that the cool kids call the OB, easy for me to say, otherwise known as the Option Block. And that is music that we've heard now 1,000 times. Yes, it sounds insane to even say it out loud, but this is the 1,000th episode of the Option Block, that show that started as kind of a fun little lark, a way to try something different, and has just become this entity unto itself. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, ever-evolving. Stay tuned. We got a fun, big announcement coming up about an hour or so here on the show. We'll kick off all that fun in a little bit. Some fun new elements coming to the network today. Figured what better way to celebrate the big milestone that is OB1000 than with some cool new stuff that you folks have been asking us for quite some time, nigh on 14 years. So, yeah, I'm going to get to all that fun stuff. Of course, you know what to do wherever you've been listening to, and whatever portion of these 1,000 episodes you've been listening to. Maybe a lot of you are new. You just discovered the option world and the options market over the course of the past year and a half. We know there's a lot of you out there. Welcome to all of you. Maybe you're some of the hardcores who've been here since the earliest episodes. Well, we welcome all of you, of course. Keep rating and reviewing wherever you have been getting this content. It really does help all those new folks we just talked about discover the show so they could tune in, maybe on episode 1001, and see what all the fuss is about. And you know what? We can't do our standard episode. Can't do a normal episode for OB1000. We got to go big. We got to have some fun. So I brought on a bunch of special guests to join me here today. But first, we got to kick it off with the two guys who have been here with me since episode 1, since the primordial ooze days of this program. If you're wondering when that was, listeners, we actually are past the 10-year anniversary of the Option Block. Our first episode was actually way back. It was a sneak preview episode back on Thursday, September 16th of 2010. So actually the official 10-year anniversary of the Option Block was before the election of last year. We just finally got around to doing the 1,000th episode right around now. And by the way, if you want a fun Easter egg, we're going to include that episode at the end of this on the podcast. You can listen to it in all of its glory. And I say glory in air quotes, listeners, because there's some things that don't change. Like Greasy Meatball didn't sound good back then. So, in fact, the audio quality for all of it, I think we were still working on getting everyone to hammer out their audio quality. It sounds like everyone's coming through the old proverbial string and a tin can kind of thing. So enjoy it for what it is, a momentary glimpse into the primordial ooze days of the show and indeed the network. It's a fun Easter egg nonetheless. And the two folks who were joining me on that program, actually there were three, but the two guys who have been with me since day one. First, let's go out. Since I just unfairly maligned him, we'll start with him. He is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, or as we introduced him back on episode 1, he was also from Expiring Monthly. Mr. Meatball, welcome back to the program. And do you recall the heady days of Expiring Monthly, sir?
Oh, that was fun. I forgot. I don't think about that magazine very much. But yeah, we thought people would want to pay for a magazine that was all about option trading. We were wrong.
You said, you know what's cool in 2010? Print.
But I think that may even predate Option Pit. But it was certainly a great magazine, and it's amazing that we've done 1,000 episodes. It's super exciting. And it just goes to show you that good option content is super important, and there's a reason why we've seen the sustained presence of this show. People love it. There's some brilliant option people on it, notably myself, and here's to another 1,000 episodes. So can't wait to dig in.
And we were also joined way back on episode 1. It's funny to see how far back, some things go. Like the meatball, he was a greasy meatball pretty early. He was also the sea bass pretty early, but that was kind of his own nickname. That wasn't fun. We need to have his own nickname on the show, a network nickname. So that's where the greasy meatball. I forgot exactly which episode that was born on, but that was his own fault. He kind of admitted to that on the show, and we just ran with it, and it became his moniker for nigh on a decade now. And also joining us, a guy who also had his nickname pretty early on, a.k.a. Mr. Uncle Mike, even though he was also called back in the early days the man from the mountains. I don't know if you recall that, Mr. Uncle Mike. And back when he joined us on episode 1, he was beaming in from a little thing called Know Your Options, Inc. Uncle Mike, welcome to episode 1000. Oh, how the world has changed in that time, sir.
It really has. I would have never, I remember when we first had our meeting in the Options Express office about how we were going to do this, how it was going to be sponsored and that type of thing. And if you'd have told me we were going to be 1,000 episodes of this, I would have been very excited about the opportunity. And I still am to this day. It's been a lot of fun. And the neat thing is that we're all doing the same thing that we were 1,000 episodes ago. I mean, the names have changed, but Option Pit is still Option Mark is still with Option Pit, and Know Your Options is not the name anymore of the firm I represent, but it's still the same group of guys. There's just been a lot of stability along the way, and it's a very exciting thing in the option trading / online podcast world, or whatever you want to call it, that we're all still here in a lot of ways. And also excited to hear from the Viceroy. I was looking at the show notes. I can't believe it's been since 2015 that he was on the show. It seems like his presence was so powerful on the show. It seems like he's only been gone like maybe a year or so, but it's hard to believe that it's been about 6 years since the Viceroy was a regular on the show. And it's been through a lot here, and just excited for another 1,000.
Yeah, I had to double check that myself. By the way, you spoiled one of our special guests to come. We will be joined momentarily by the Viceroy as well as others very soon. But you mentioned kind of the early days of the show there, Mr. Uncle Mike. And for anyone who's curious how this all came together, it was funny. The folks at OX, they were one of the early online options brokers, obviously, and they had been on me for a while to do something on the network. And we could never make anything work because we wanted to have people on from OX to represent the firm and kind of talk about options, and there was no one available there. They wanted to keep having, Joe Cusick was their educational guy, but he was always busy doing stuff. He wasn't a reliable person to get on the show. And there was a guy over there, I remember, BizDev guy named Josh Ukenick. He's out of the business now, I know, but he was a good guy. And he kept bugging me about doing something. And so finally I thought about it one day. I said, what about those two crazy Mike guys? They're kind of OX related, and they do this Know Your Options thing, but it's through kind of the OX kind of affiliates. And why don't we do something like that? And that was kind of the moment where it clicked. And if you're still agitated by the meatball a decade plus later, that was Josh's fault. He brought the meatball to the table. So you can hold that against him. We were also joined in that first episode. There was a fourth seat there was the Options Express seat. And at the time, it was filled by our buddy, Mr. John Griga. So I found out later it was my wife's second cousin. So small world that we live in out there. He really wanted to join us on the show today. Fortunately, he's moved up in the world a little bit as well. He's now the managing director for all the derivatives over there at Charles Schwab. And he tried, but he said the red tape to get him approved to come on the show was just too much. So he sent this statement. He said, to Mark and the rest of the Option Block hosts, congratulations on your 1000th show. This is a testament to the informative, educational, and entertaining derivatives content your team delivers each week. So we missed John here on the show. He was infamous back in the day for his love of Zynga calls, all the Zynga $5 calls that he really was a big fan of. We also had the other Mike, Auntie Mike Kavanaugh, on the show there back in the early days as well, also from Know Your Options, Inc., who helped kind of kick off some of the naming convention for this show. And we were in those early meetings spearheading what the show would be. TOSAW obviously comes from a football background, so the name Option Block works on a couple of different levels. It's a block for an option play. In football, it's also kind of a play on the term auction block. So it kind of worked on a couple of levels. So we kind of put that block kind of terminology and theming together, and hence the rest of the segments kind of followed suit on the show. And the show was born. Like I said, we kicked off on September 16th of 2010. And I'll give you, like I said, it's going to show up on the end of this show so you can tune into it. But it was kind of fun just listening to that episode and seeing what we were talking about back then on that episode. Some things don't change. Like TOSAW, back in that first episode, kicked off his long-standing love for Apple, which was a ongoing theme of the show for a long time. On that same episode, the meatball slammed him for loving Apple. And we talked about a bunch of things. Paper selling, back at the time, Apple was around 275. Think about that, listeners. And we were talking about paper selling, the 230, 270 call spread in Apple when the vol was 28%. It was about $5, $4 away from the all-time high at the time, which was 279. TOSAW was talking about it. Sebastian was slamming it. He called it the Prius of stocks, which I think if we were to fast forward that analogy about a decade, it'd probably be the Tesla of stocks. I think that's what he was going with. He said everyone loves it, which makes him want to sell it. So that was the beginning of the love-hate, Uncle Mike loving Apple and the Sebastian hating Apple kind of methodology. We talked about leaving iPhone, going to Android on that first show. I had just gotten my first Android phone. Talk about RIM earnings. This is how far back it was, listener. We analyzed RIM's earnings live on the show, aka Research in Motion. The stock at the time was $46.70, and people were gobbling up the 45 puts that were earnings after the bell. And for $1.25, all they can get that expired the next day. So that should give you some sense of where the sentiment was leaning for RIM. And in hindsight, that probably was the right way to go. Let's go on the horn really quickly. Uncle Mike, we'll start with you. Any lingering memories from that episode 1, sir, and those early days?
Not from that specific episode, but I remember just the involvement from the early days that Options Express had. And Options Express is where I got my start for my career in this business. And so I always have a lot of warm, fuzzy feelings for that company. I know Schwab bought it, so it doesn't exist anymore, but still think about that. Oftentimes when I think back to that era, think back to how we were all kind of newer to the whole Skype conference call broadcast idea that you came up with for us. And the things that another thing that you had mentioned or another thing that we can talk about, things that never change, is how we oftentimes forget to mute ourselves. Andrew,
10 years later, he still hasn't learned how to hit that red button.
It is. And so we have that, but it's just really look back on that with a lot of fond memories, just from the standpoint that, in the early days, I remember just begging our audience for prayers as my wife was on her deathbed. She survived, so she's still with us. So, I have a lot of warm feelings for our audience with that. I remember I went to college in Joplin, Missouri. And just a couple days ago was the 10-year anniversary of the Joplin tornadoes. I remember just asking people to send money to Joplin just to help them in any way with which we can. And I'll never forget, I think Sebastian agreed to match any donation or something like that, or how it was. And I think, I forget if it was you or Sebastian saying, we are indecent people, but we're at least going to do decent things today. So, yes, no doubt this show is about option trading in the markets, but for me personally, it runs much deeper than that.
Yeah, a lot of your clients, people you developed great long-standing relationships with, found you in the primordial ooze days of this show here. So yeah, a lot of what it became St. Charles Wealth was born from the madness that is the option block. Speaking of madness, that madness evolved over time. Listen, I do recall the first time this next person joined us, because I do believe it was a joint appearance. I think the Meatball at the time was doing content for The Street. I do believe this fellow was as well, because they did a joint appearance. I think they both beamed in from the street.com offices, which is one of the first times I chatted with this particular fellow. And then later on, he made his first solo appearance on the show on episode 84, called, I guess in hindsight, appropriately enough, The Madness Returns. It was August 19th of 2011, where we were joined really, by the one and only Rock Lobster himself, Mr. Andrew GIOVINAZZI, back then of Acumen, Mr. Acumen fame, Mr. Rock Lobster. You weren't the Rock Lobster yet. That didn't come till later. But do you recall that first appearance and the days of beaming in from Acumen, sir?
I do. I actually do recall. I can't believe I can remember that far back. I've gotten so old, it's hard for me to think back that far. But it was, I think I was there shilling the product and trying to extol the virtues of 3D technology for option trading, which sadly never materialized in a major way. But the good news is I'm still here. And that's when Mark and I met. And now 10 years later, as the Option Pit is growing faster than ever, actually, at this point. So the show has been very, very good to me, as I should say. The show has been very, very good to me.
And you have a sweet nickname. So what more could you ask for, sir?
The nickname is appropriate because a rock lobster, I would guess, is some sort of craggy creature that lives under the water, which is not very far from, my daily life.
I may or may not have borrowed it from the B-52s, but that's neither here nor there as we keep on rolling, because around that same time, Rock Lobster popped up on episode 84. It was a heady time for the option block, because on episode 86, we had the first appearance of another soon-to-be option block stalwart, the man Uncle Mike mentioned we've missed dearly since he departed the show. Remember, of course, we kicked off the show with Options Express. We've had interesting timing on that front throughout the life of this show, where brokers come on the show, and next thing you know, they're gobbled up by somebody else. It seems to be a regular pattern. And it first started with Options Express because they were gobbled up by Charles Schwab. And during all of that maelstrom period is when we were joined, episode 86, entitled Back in the Day, August 30th of 2011, by none other than Alex the Viceroy Jacobson, now hanging his hat as the CEO over there at EXITOS Capital. Mr. Viceroy, welcome back to the program. It wouldn't be OB 1000 without you, sir.
Thank you, Mark. And you can't imagine how much I've missed this. And just listening to the opening comments made me homesick. But I'm so excited to be here. Andrew talks about his extended age. He's a youngster compared to the rest of us. But I'm thrilled that I'm still in the options business. In fact, what I'm doing now is a position that actually came out of the blue. I had actually retired, and my phone rang, and a gentleman on the phone said, "Do you remember me? You taught me options when you were at SEBO." You know, I sat in the third row and wore a white shirt. And I went, "You just described 37,000 people." He said, "I need a new boss." I said, "What does it pay?" He goes, "It pays." I said, "Done." And I've been at EXITOS now for what'll be going on 5 years. And again, because of my age, I'm actually closer to the end of the career. Stay home and play with the kids and the grandchildren. But I'm so excited to be here, and I was so thrilled to get the invite.
Mark was right. When I saw that date, it didn't seem possible that your last appearance was on episode 420, appropriately enough called Farewell to the Viceroy, that aired on March 31st of 20. It doesn't seem like it was 25th March of 6 years ago, Alex. Is it possible it's been that long?
No, we did one episode later from your office.
That's true. The first ever live episode you were on that
right.
one. Yes.
We did a live episode when I think I was working at the Chicago Stock Exchange. And that was a fun episode. And plus there were refreshments. So it was fun on both parts. I still obviously interact with a lot of people in the industry. Mike, you owe me lunch because I bought last time. But the pandemic set everybody back a lot in the industry, and thrilled that it's coming to an end, hopefully.
Indeed. As you mentioned, he was on for the first ever live episode that we did, which is now kind of a staple, which is what we do, which will be evolving as well. Stay tuned for that. And by the way, you folks listening live, and there'll be more of you joining in. We'll be turning to you. So if you have questions, hit us up. We know we love the live folks. By the way, it's great to see. I just saw this Kyle Benson in our live stream right now. He used to be the man behind the scenes, listeners, who edited all of our shows. He even made the Rock Lobster sound good, which is a challenge. Out in Colorado, I do believe now. He says, congratulations on 1,000 episodes, Options Gang. It was fun to be the man behind the scenes and edit 500 plus of those shows. Here's to another 1,000 episodes. Well, we certainly miss you behind the scenes here, Kyle. Hopefully things are going well out there in the far western reaches here of the U.S. But we're not done. Not done with special guests, not by a long shot, listeners. More will be joining us a little bit later. We've got more coming on right now, including another guest who joined us during the interim of all the madness. Again, the show has been running for a while. We've had a lot of different firms and a lot of different people on the show over that time, including our next guest who first joined us. I do believe this could be fluid. It could be a few episodes before or after, but I do believe he first joined us around episode 528, appropriately enough entitled Staring into the Eye of Sauron. some visual imagery I've come to like. You might have gleaned that from these 1,000 episode listeners, hence our Eye of Sauron in the Odd Block segment. That was back on June 3rd of 2016. We are joined by Mr. Todd Rich, now the head of content and education over there at IGUS. But back then, he was holding down a similar title over there at Options House. Mr. Rich, welcome back to the program, sir.
I am super jazzed to be here for OB1K. I think I've joined the option block. Let's see. I think I joined when I was at Box Options. I'm not sure I joined when I was at the New York Stock Exchange, but it's possible. I know I was definitely there at Options House and E-Trade. And I know I was back recently as, representing Nadex. So I get to come here and talk about all sorts of stuff. We got all sorts of stories that go back.
So you may get the award for having worn the most hats on the show here, sir.
I have definitely. I think so. I think I win that because, it's because I change organizations maybe every 5 years, just to keep things interesting. Well, it's usually because wherever I'm working gets bought. So I've been traded quite a bit as companies have gotten bought and sold, whether it was Eurex US, whether it was the New York Stock Exchange Technologies Unit, New York Stock Exchange to ICE, whether it was Options House to E-Trade. Yeah, I've gone through that ringer way more than once. Way more than once.
You are a valuable asset that the firms are fighting for. By the way, I'm looking right now at the coffee maker that is still here in the studio, which was installed at your insistence. You're the only guy I ever knew who wanted to drink a hot beverage before the show.
Yeah, I don't have a cool nickname, and I probably wouldn't want the one that they gave me on the trading floor. If you asked people from the SEBO who Todd Rich was, they go, I don't have any clue. If you asked them who Spaz was, oh, well, that they knew because my acronym was SPZ, but it was probably because I drank way too much coffee, and I still do. So, and I appreciate you serving that to me, even if it was in your office at 3 p.m. to record an episode. I'm always game for an episode.
It's been kind of gathering dust ever since. So, you got some good usage. You probably have one of the more infamous first appearances, Todd, because you guys came on from Options House and, the ink wasn't even dry on you guys joining the show. And as you're walking out of the studio, you guys were acquired by E-Trade. I think it happened that fast. So one of the more infamous snatching ups on the show, sir.
Definitely some fun memories. Definitely some fun memories and definitely some fun times in the period of what I'll call the great consolidation of financial services firms. And now in the retail space, it's kind of interesting that we're seeing an expansion of that, a lot of it. So it's interesting for the retail customer how things consolidated and how opportunities for the retail options trader increasingly got better. Whether it was when I was back at Box Options, where we fought for the customer for pennies, and we had the price improvement auctions. Now it's commonplace. Now everything trades in pennies. Customers have the opportunity to get price improved. Every exchange now has those mechanisms. And now there's different ways for customers to access the markets and for retail customers to participate. They've never had more choice, and costs have never been this low. So it's really been great for retail traders, and the Option Block show has been there to record for posterity all of it.
You guys over there at Box don't get the credit you deserve, but before penny pricing existed in the options market, we all take it for granted today, listeners, the folks at Box kind of introduced it with their penny auctions. And then the rest of the industry promptly ripped you guys off. And then you guys promptly sued everybody. And it was a lot of back and forth. And they all finally paid you. But it was interesting times, but it was a little bit ahead of the game over there in the land of Box. We can get to our usual format in a little bit. And of course, we got some more special guests joining us in about half an hour. Big surprise announcement coming up in about half an hour as well. But first, a couple other thoughts and reminiscences on the just 1,000 episodes. How do you even encapsulate that? It's darn near impossible. By the way, we got Jay4340 in the chat saying, congrats on 1,000 guys. I don't usually make it to the live show, but I couldn't miss this one. And I haven't missed a podcast in almost 4 years. Well, thank you for that, Jay. He says, thanks for all the entertainment and education over the years. And here's to 1,000 more. Well, thank you very much for you and everyone else who shared those sentiments over the last week or so as we've been talking about this big Option Block 1,000th episode spectacular. By the way, a few other fun milestones and just interesting things that have occurred over the run of this show. We did some fun recordings in some fun live places. We did our first one actually with some of us together in a room on episode 9. It was me with the Uncle Mike. It was live to tape. It wasn't specially live. And another one of the OX co-hosts there, Mr. Tim Navabi. Remember him? And we did it live at the FIA conference. It was live to tape, though. It wasn't on the stage. And then about in July of 2011, we did our first episode 75, which I do believe is when the aforementioned Kyle first joined us. He joined us to help be the live audio editor for that event. We did our first big live episode on a stage of the Option Block. We took over Elephant and Castle here in downtown Chicago, took over that place, and we had a ball, and we had everybody joining us on stage. We had, of course, myself, we had Uncle Mike and Auntie Mike, both of the Mikes. We had Rob Kurzakowski, another one of the OX guys, as well as Tim Navabi and John Grigas. We had a trifecta from OX. We had the Meatball joining us, as well as Tony Batista from over there at Tasty Trade. Tom Sosnoff was going to join us live, and he had emergency dental surgery. So Tony subbed in for him last minute. In fact, I still have the sign from that event hanging in the corner of the studio. That was a fantastic event. I remember, Sebastian, I think as you recall, I remember you freaking out when you saw Sheldon Natenberg in the audience. That freaked you out. Do you recall that, sir?
Yeah, I do. I was actually just thinking about that as you brought that up. Because, he didn't even announce that, he was coming. He just kind of showed up and listened. It was fun. That was a good time. That was the first, that was my first beverages paid for by the Options Insider. And there were many more to come in the future. In return, there were juicy steaks paid for by Option Pit that entered the mouths of both Mike TOSAW and Mark Longo, I believe.
One of the few times I've seen Sebastian kind of speechless and a little Star Trek. Obviously, outside the first time he met me was when he saw Natenberg in the audience. He leans over to me. He's like, is that Sheldon Natenberg? If you don't know, listeners, the author of Options, Volatility, and Pricing, a.k.a. the tome we were all handed when we walked on the floor of the Cboe. They said, hey, kid, go read this. It was kind of like the Bible for options trading. So having him showing up at our big live event was really fun. We did another one a little bit later, episode 97. The Viceroy joined us for this one as well. This time was live on the stage at the Futures Industry Conference here in Chicago. That was really fun. They don't really do that anymore at FIA, but we took over a whole stage there. We got to beam out to the crowd. It was fantastic. The FIA listeners is the Futures Industry Association. It's a huge trade show here for the derivatives world. The entire derivatives universe from all over the globe descends on Chicago for that 1 week. And there's a huge exhibit hall with hundreds of exhibitors, exchanges, brokers, trading firms, you name it, all over the place, vendors. And so we took over the stage in that huge exhibit hall, and it was awesome. It was fantastic. Mr. Viceroy, you were on that episode with us. One of your first episodes. We kind of threw you to the wolves pretty quickly there. Do you have any memories of that episode, sir, from the FIA stage?
Yeah, in fact, Jimmy Rouzan was with us. Isn't that the one where
I do believe you're correct? Yes, I think he joined us from OX that time. Yes.
Yeah, well, it was. Listen, anything live is great fun because you get direct interaction with your crowd, and it was just great fun. As you pointed out, FIA is a great conference, and every year you go and look for the new exchanges that are there, and 3 years later, you come back, they're either a monster exchange or they're still struggling. But you always had a lot of folks from the Far East at those kind of walking around curious, not picking up your toys, but wanting to ask you questions about market structure. And you'd go, oh, okay, sit down and who are you? So, yeah, it was great fun.
Great fun indeed. Uncle Mike, you were also there with us for all of those live shows. You also initiated one of your own when you beamed in live from the Duke University Graduate School of Business for an episode. So this show has kind of been done from all over the place. Uncle Mike, what are your fond memories of the live shows, sir?
Oh, they've always been a ton of fun whenever we've gotten to do that. Whether it was at an option pit event that we were doing it with, or just wherever it was, I always had a ton of fun. I know when we got invited to speak. I got invited to speak at Duke University, the graduate school, a few years back. We had a ton of fun with that, and the thing that I remember is it was. They're a great group of students, and after the show, I remember taking questions, and we got very deep with the questions of some of these graduate students. Don't get me wrong, but one of the things that I really remember is just how technologically sound the Fuqua School of Business was, in that I told them, "Okay, we're on a Skype line. We do this, we do," and I kind of explained how everything worked with it, and they had their AV technology guy that did all that, and he said he just hit a few buttons, and I'm in front of this group of students in this lecture hall. And they're like, "Okay, you just need to talk normal." I'm like, "Okay, that's it." I said, "Yeah, we have specialized microphones that it'll pick up your sound." And so I think you and I tested it before the show, and it was impeccable and near perfect for our sound that day. And I had no headset, no nothing, just everything was just done the way you would think Duke University Graduate School would do things, and they did a phenomenal job with it. So it was a lot of fun, and it was really neat to just get the younger students involved in the option product. And I know that they have derivative classes there, but then when they got to be a part of the show, asking questions about how these products are actually used, it was just really neat to pass on knowledge and to be a part of that for the next generation.
Yeah, it's great that schools are offering classes in this stuff, and maybe the resurgence of retail options trading this year will kick off a new wave of classes in these. So I remember when I was in school, I had to kind of scam my way into the grad school as an undergrad, as a TA, just to get access to the derivatives course there at Cornell. It wasn't offered for undergrads. And then once I took it, I was like, what are these? I need to learn more about these things. And then Barings happened, and it blew up everybody. Everyone was terrified of derivatives. And I said, maybe I should learn more about these. And the dark path of my history was set. But still, interesting stuff. And yeah, hopefully that knowledge can get out there to more folks out there at the schools. Of course, we've recorded from other fun locations. I've beamed in from the Southern studio many times over the years. Uncle Mike and the Rock Lobster and the Meatball have taken their turns guest filling in for me on the main hosting chair, all with equal praise and or slamming of their efforts, but noble efforts on their parts nonetheless as well. We've done multiple live events from Option Pit at Gibson Steakhouse, which was awesome. Gibson's kind of like the granddaddy of all the old school steakhouses in Chicago. We've done them from there and a bunch of others. And of course, Mr. Meatball's even dialed in from a train a few times. So lots of good stuff there as well. Speaking of good stuff, we've got Cliff's Picks in the chat saying, hi, guys. Well, hello, Cliff's Picks. I hope you take good pictures. And Jay Krause saying, OB1K sounds like a Star Wars droid. Congrats, everybody. Yeah, I agree. That's kind of fun. Maybe we need to have a tchotchke that says OB1K on it. It looks like a cool droid out there. Other things. Obviously, this show has run for 10 plus years. So we've seen a lot of notable events occur in that time frame. I'm just going to do a quick synopsis of a few of them that are really relevant kind of to this show and to our audience. But there were many of them over the course, many of them just in the last year. I mean, insane times we're all living through, but just a few of the notable events in our 1,000 years, almost 1,000 episodes here on the show. We, of course, had kind of relevant to now the rise and then fall and then maybe rise now again of many options out there. We'll see. Fingers crossed. The rise and fall and then rise again and now fall and perhaps rise again of crypto. All of that over the course of the past 1,000 episodes. We've seen this emerging dominance and stranglehold of Apple on the options market, which was something we talked about all the way back on episode 1. And Apple has just cemented that dominance ever since. Pretty much every day, it is the number one name we still talk about in terms of volume. Once in a while, it gets usurped by a random name, but 99% of the time, it's Apple topping our most active list here on the show. Also, I mean, the Meatball joked about Prius on that first show, but Tesla, the rise of Tesla as kind of a number 2 to Apple, another hot trading name a lot of you love out there. It's kind of been another thing we've documented here on the show. Remember, we kind of coined the term Tesla catastrophe puts. That was a very hot subject here on the show for over a year, about a year and a half. We still beam in on them every now and then. The enormous amount of open interest in these puts that are otherwise worthless. You know, Jan $1 puts and pick your year. There's usually maybe 100,000+ of those open at any given time. So that's been a fun thing. Other hot events we lived through, the 2011 debt crisis. People forget about this and all the other madness that happened. Of course, we kicked off the show after the 2007, 2008 meltdown. We were a few years after that, but one of our first big events we kind of lived through on the show was that 2011. Remember, back in August 2011, they downgraded the debt. People forget about that now. That was a huge deal. Markets were selling off. It seemed like it was just complete insanity. We had, of course, an issue that was big for the industry, kind of Hurricane Sandy coming in and shutting down a lot of the firms in New York. And so they had to kind of beam out to other locations. It's one of the first times we kind of had a bit of a trial run of what the whole business lived through this past year, going electronic and beaming in from remote locations. That was more of a kind of an inside the bubble one, but a fascinating one nonetheless. Of course, who can forget Volmageddon, VIX Apocalypse, call it what you will, from back of February of 2018. We saw VIX spike. We saw XIV go the way of the dodo, along with a lot of other trading firms over the course of that time. Of course, we're talking about how much vol there is, how much VIX is moving VXX. Just dial back a few years to 2017, a.k.a. the year that VIX died, a.k.a. the year of no volatility. Go back, listen to some of those shows from that year, listeners. The ongoing theme was, what the hell? There's nothing to talk about. There's literally no vol. Trump came in and everyone on the network was saying, the one thing we can all agree on with Trump, he is not a single-digit VIX president. Multiple people said this. And then ironically, as if to almost prove them wrong, that's exactly what he was for the first year of his presidency. Of course, things changed afterward. But for that first year, everyone was thinking about, VIX in the 20s is normal. Go check that out. We were languishing around the 9 handle, 8 handle VIX. Interesting times. And of course, this past year and a half where we saw something unprecedented almost every day, but the pandemic really seeing everything shut down from an options perspective for the first time ever and going fully electronic. It's hard to understate how important that was. It was a seismic event that was for the business. And also, just as we've alluded to a bunch of times, the retail just discovering options. I mean, they've always been into it and always been growing, but over the past year and a half, it's been on another level. And we've seen it on the audience of this program and others, just the folks out there discovering the product. Maybe Mr. Todd, we'll start with you. That's a lot of things to look back on. But A, if you have any favorite kind of memories from your early appearances here on the option block, and B, any of these other kind of events that occurred during your time here on the show, which, if any of these really stand out and resonate to you, sir?
Well, I'm just trying to think back on episodes of the show. I'm glad to say that I'm not the oldest guy on this phone call. I think somebody else wins that prize, but I'm certainly there. I'm old enough and I've been around long enough to have remembered 87. I was
Ouch.
at Box. Yeah, I know. And I'm sure Alex could probably share some wonderful stories about that. I was at Box at the 2008 little hiccup. That's the year that Box had to host the industry conference for the OIC. And it was the year that no one was allowed to come from any of the big banks because it looked like a boondoggle. So we had to throw $1 million conference with 0 sponsors and managed to pull it off. I mean, just the events that have happened. I'm a little, I will say we've had some interesting volatility events in the last couple of years that some of the newer traders have, they've seen a little bit, but the repercussions of the extreme volatility moves, usually to the downside, have been very, very short-lived. And so I'm not quite certain some of the newer traders or people who have come into the markets in the last handful of years really can anticipate what's going to happen when interest rates go back up, when they eventually do go back up. There's going to be some fun times in the markets, and there are going to be lessons that are learned by everyone. But I will say this: it's been great having all of these retail traders come into the markets. I think it's good for people. I think it's good for the markets. I think people should take interest in their own success. I mean, after all, who's going to have the greatest vested interest in your financial success other than you, where previous generations have just turned that over to money managers? So folks who are coming into the markets now, taking an interest, wanting to learn, wanting to advance themselves financially, I think it's all really good things. And I'm just glad that I'm in a spot where I can help. When I was at Box, when I was at E-Trade, now that I'm at Nadex, I love interacting with the retail traders and giving them opportunities and choices to enhance their well-being.
And Mr. Viceroy, same question for you, sir. Which of these events really resonates to you during your time on the show? Or maybe there's something else we've forgotten here. Again, it's a decade, so a lot happens over that time. What are some of the moments that are really crystallized in your memory as standing out during your time on the show? Like, wow, that was crazy.
One thing we talked about on the show a lot, and I think people thought I was crazy when I brought it up, was the elimination of fees to trade. And we talked about that a few times on the show. And at the time I was at Schwab, I digress for a minute. When Grigas tells you he was mired in red tape to come on, I'm so sympathetic for what he has to, compliance in retail is a real challenge today. But free trading, Robinhood making it easy, and people throw a lot of stuff at Robinhood. Fidelity in the last 2 weeks announced a teenage investment program, which I think is a fabulous idea. It doesn't look like it will have options in it the day it hits the ground, but putting a firm behind it like Fidelity, with the wealth of resources, the ability to trade, the great ETF and fund family, I think that's what's helping to bring younger people into the marketplace. I don't think any of us believed when we did the show that interest rates would stay this low. And I think that's been a surprise in terms of looking back. Now, we understand now why they're low, but I think the German rate is still negative. And I used to quote who was negative near the end of every show, and I think people were like, he's got a fixation on this, but I'm shocked at it. As Todd pointed out, education is the key. I visit about a dozen universities every year, mostly to have the relationships and to do some recruiting. And the world-class universities in derivatives still have some of the most amazing, talent teaching again, it's mostly in grad schools, but they have amazing talent. And, Wall Street has run the full circle when everybody in graduate school wanted to become a banker. Then nobody wanted to become a banker after, Lehman and Bear Stearns and some of the other catastrophes that hit Wall Street. But we as a derivative people, and I did this when I was at SIBO, I did this when I was at the ISE, I do it now at EXITOS. We visit universities religiously, talk to their graduates, soon-to-be graduates, and sure, they all want to know, are you hiring and where are the jobs, and do you know the guy at Morgan Stanley, and do you know the guy at Goldman, but education continues to be the key to this business. And as I say, Robinhood takes a lot of flack, but they really democratized the investing landscape. Going forward, we're going to see a lot of market structure changes. As Todd mentioned, I think we will see an enormous amount of consolidation. And, like the Obama administration said, if you like your insurance, you'll be able to keep it. That wasn't true. But if you like your brokerage house, you'll be able to keep it. I suspect that will not be true. And you saw it already, Schwab, where Options Express Schwab, first Schwab bought Options Express. Now it's made a run at TD. It spun off U.S. Trust. The industry is going to evolve, and the next big evolution, I think, is going to be market structure and more democratization of market structure. There's been a lot of enhancements. Yeah, you can trade on your phone and things like that, but some of the market structure in terms of payment and maker-taker, at some point the regulators are going to grow some cojones and take a hard look at this and see if in fact customers aren't being harmed. I was at an academic institution. Well, I was actually doing a Zoom visit to an academic institution, and they had just done a research paper, and the research paper, data they collected showed that payment for order flow has widened spreads. Okay, so probably not a big surprise, but they showed its widened spreads in non-payment issues and in non-payment environments because people are looking at NBBO and things of that nature. And the fact that you're getting paid and maybe paying a widened spread is not good, but it's worse if you're not getting paid and incurring a widened spread. So I think market structure, eventually Washington is going to get some sense of this. We periodically visit the issue of a financial transaction tax. And I know it's not a popular issue, but I'm going to shock your listeners by telling you that in the institutional community, it is strongly supported. And the reason it's supported is how much dark liquidity has been driven into the darkness because of high frequency trading, getting picked off. Even in the options market now, preferenced liquidity on many days is a huge part of the volume. And, in a handful of names, retail can now trade the spider 24 hours a day, 6 days a week, if their brokerage house allows them and hooks up to the desks that make the night markets in it. And I think you're going to see a lot more of that. We always talked about on the show, why weren't the options exchanges open late? This was when we got beat up on probably every fourth show I own options on this, and it went up $42 in the after hours. Why can't I get out of those options? And we would always say, okay, but you could do the stock. There's a couple of things. You'd come in the next morning and it would open down 3/8. And, clients were just livid. That's going to change. I mean, that has to change. And I'll get off my soapbox now, but I think you're going to see a lot of that coming. I think you're going to see hard payment in some time cycle lessen. Liquidity market makers, 3 market makers are half the options market most days. And one of them isn't even a market maker. They're a professional customer. Not that I have any problem with that designation and the rules that go along with it. But if they're a professional customer, I'd rather trade with them over the phone upstairs. So change is coming.
Indeed, sir. It's funny you mentioned the new Fidelity stuff. Maybe a little bit of a glimpse into who may be joining us. Special guests in a few minutes out here. But before we get to them, let's go back around the horn. Let's go back to one of the guys who's been joining me since episode 1, the greasiest of meatballs. Sir, I mentioned a bunch of events that have resonated with us over the course of the decade-plus run of the show. Alex just broke down a few more. I remember back in 2011, the debt crisis really kind of resonated with you. Obviously, Volmageddon. Which of these epic market-moving events really resonate for you as you look back on the show, sir?
Well, I think the thing that's interesting about Volmageddon is we were actually recording the show. And Andrew was on that day, and I jumped in to the show because I was like, Mark, are you seeing what's going on after hours? And we talked about it for about 10 or 15 minutes that day about the fact that it was absolutely exploding. I think we were recorded the show in the middle of the Chinese debt crisis, the Chinese stock market debt crisis in 2015, where we had kind of that crazy blow up. We were recording during the debt downgrade that Monday when we came in after S&P downgraded the United States. Really had a strong effect on interest rates going to AA. Way to go, S&P. And there's been some moments that we've been, because it's filmed live, where we've been here in the middle of the day as things have gone sideways. And it's kind of neat to think about that. You're able to get that live commentary from by listening into the show through Mixler, or the next day hearing how professionals are actually reacting to what's going on. There has been a lot of changes. We've had all of our sponsors get bought, only to see this new crop come in, and the darkness of payment for order flow. How many exchanges have been added since we started the show? What, 10? And almost entirely built on the back of payment for order flow. Alex wants to say, that, payment for order flow is going to go away. The pushback from the exchanges on that, I'd be very interested to see what that would be, because that would basically drill things right back to where they were 20 years ago. We'd only have purpose for 3 or 4 of them. And so there is, I think a lot of things that have changed. And then only in this last year, we've seen option contracts, monthly option contracts go from 15 million to 40 million to back to 30 million now. And it's just the speed with which things have changed over 1,000 episodes would astound the Mark Sebastian Seabass, who was not a greasy meatball yet. And but this greasy meatball, sees more changes ahead and more curveballs thrown at this market, and hopefully some more players entering. Because I'll tell you, if Congress takes on payment for order flow, the amount of independent market makers that re-enter the marketplace will astound the audience out there. I will go from 3 to back to 50 in the blink of an eye.
There you go. You're going back to Sebastian Market Making Inc. when all that happens, sir.
Mm-hmm.
Going to launch the new entity, the new arm of Option Pit. Like I said, we'll be joined by new people in a few minutes here, but let's keep going around the horn. Let's go back to Uncle Mike, sir. Uncle Mike, obviously a decade plus here on the show. Many events. I laid out a few. The Viceroy laid out more. The Meatball laid out even more. Which of these events that kind of went off during your time on the show, sir, really resonate and stand out to you?
Well, a few of them, but the other one that I don't think anyone mentioned was when we first started this show, weekly options were a brand new thing, and you had a monthly option, and then in maybe a handful of really very liquid names, you would have a 1 week option. So you'd have your monthly, and then you'd have 1 week out. And so initially, that's all you had. And I can remember even talking on the show how I wanted to have more weeklies, not necessarily because I wanted the 1 weeks, but if I wanted to, I'll use them from time to time, but more so if you want to have a 2 week, a 3 week, and so on. And we've really evolved from that in that you can get options on like the SPX or the SPY almost every day now. And so that's something else that's been quite a difference from when we first started this show. I mean, when I worked at Options Express, Expiration Friday was a huge deal in that anyone who had a Series 7, they didn't want you leaving for lunch. That's why every Expiration Friday and every Expiration Monday or the Monday following it, they wanted all hands on deck. So they bought everybody in the firm lunch. And I'm not sure if they were doing that maybe in 2010, 2011. I wasn't there, but Expiration Friday was a huge deal. And I remember Gary Morton, the OX, the guy that was in charge of risk, he used to give us an old school Newt Rockney football pep talk because he would have guys that weren't typically on the trading desk work the trading desk that day just because it was such a huge deal. And we would do things called closeouts. And what that would mean is that, let's say that the XYZ stock is, there's a vertical spread on XYZ stock and it expires that day. And if it's between strikes, you would look to see if the client's been logging in. If he's not been logging in or hasn't been anywhere close to it, you get him out of it right there on the spot because you don't want the client to take on the risk of being long 100 shares of like a Google or an Amazon if he doesn't have the account funds to handle that. So you wanted to stop that. And I remember in his pep talk, he would always end it with, and then you have Google. With Google, if Google is $1 out of the money, it's in the money today. And so he'd always change it with that. And now it's not quite as big of a deal because Expiration Friday, the event with which it was roughly 10 years ago, it happens, it's every Friday now. And because there's so many different weeks and days, you have the Wednesday expirations, the quarterlies, you have it. Expiration is definitely very different now. And the magazine expiring monthly, you couldn't really have that name anymore today. So yes, you have the monthly expirations that take up a lot of the volume, but there's definitely been a lot of change with regard to the different expiration cycles.
Yeah, that's a great point. I mean, who even really says Expiration Friday anymore? It's not really a thing. Once in a while, maybe you'll turn on like whatever, a CNBC or something else, and they'll start going on about quad witching, and all the crazy magical powers that is supposed to have. But outside of those rare aberrant events, who even talks about Expiration Friday? Because it's every freaking week now. And then, of course, we get beyond that now. We've added multiple expiration cycles, the Wednesdays, Mondays. VIX pops off middle of the week. It's like every day is pretty much an expiration. So that is a good point. The notion that the concept of expiration itself has evolved markedly, even since we launched that show. And Mr. Rock Lobster, last but certainly not least, as I go out and grab our newest additions to the show, what are some of the events, maybe crazy, maybe awesome, that really resonate for you during your time here on the show, sir?
Well, one thing about the show is it was kind of launched at the bottom. Like when we started, or I started on the show, like retail option trading was pretty dead. I mean, 2008, 2009, I think, there's always a cycle with trading, and we've been in a 10, 11-year cycle, I think, at this point. And what I thought was, which we haven't mentioned yet, was was during COVID, like trading blossomed and bloomed. Like we had more people trading. The exchanges were all electronic. Could we have even done the all electronic thing? Because it's the most recent thing, but I thought it was pretty amazing. So from my point of view, I wasn't on the floor anymore, but I didn't notice really any changes. Like it was all electronic. The liquidity providers are down there, but it's an all electronic marketplace. Retail is used to an electronic marketplace now. So I think it was amazing that this whole business literally, so in the last 10 years, has just gone off the floor. I mean, it's all electronic, it's all on servers, and people weren't on floors, and I don't think anybody could see the difference. So I think we have that number one, which I think will be better in the long term. And then number
Andrew,
two.
I think Pearl, your dog, disagreed with that entire thesis.
Oh my God, she's a pain in the butt. But she's my only friend during the day in my office. But so yeah, all electronic. And then number two is like how we now have retail here for a year, like hard, huge volume retail trading. So I mean, I can't think of the market being any more different. I remember just going down the floor in 2009 trying to start the Acumen business, and just the floor was like it was quiet. There was people still on it, but there was very little business. Electronic trading was 8 years in, and the SIBO still had a press. People were still on the SIBO floors, Picos floors. But I think that's the biggest thing, is just the migration of what we thought was a complicated product. Totally off the floor, and went through this whole COVID thing. I mean, at least from a trading point of view, like I said, I didn't see any real drop in performance from the exchanges. I thought that, it worked pretty well, and I was pretty shocked. So that, I mean, from the time I started this show to now, I thought that's one of the bigger sea changes. And it also, obviously, it's an opportunity for Mark and I at Option Pit and for everybody else in the education business, because people are getting more interested. And like shows like this, I think it's overall a very positive, a good positive long-term run rate on this one. So anyway,
not bad. 1,000 episodes, 10 plus years. There are not many shows that make it that far that I could think of, many, if at all, out there. By the way, it's glorious to have the Viceroy back. I love his melodic breathing. That it's kind of just it lulls me into a nice relaxing state. We are joined by some special guests again, but before we get to that, I know Todd, really quickly, I know you have some thoughts, and that speaks very much to the nature of your business right now. You now are over there at IG with, if folks don't know, the parent companies of Nadex. They also did just acquire a little firm called Tasty Trade as well, so you got some skin in the options game as well. But Nadex obviously lives in that very short expiration window. So what are your thoughts on kind of what Uncle Mike brought up of the evolution of the concept of Expiration Friday over the course of these past 10 plus years and 1,000 plus episodes, sir?
Yeah, by the way, the expiration concept, that was a great call. Going from quarterly to monthly to weekly to daily. And now it's actually even shorter terms. What do retail customers want? They love the decimalization. They love the all electronic access. At Nadex, we've got knockouts and call spreads that are in the next couple hours. But we even have binary options. People looking for the S&P, they just want to trade the S&P 500. Is it going to be higher than 42.01 in the next 20 minutes? We've got expirations that go hourly, 20 minutes. If you want to trade 5-minute binary options in foreign exchange. We've even got those where customers are looking for that. Retail customers want that high volatility, high action, high velocity trading opportunities. Yeah, it's really remarkable how that expiration cycle and access to those expiration cycles has collapsed down to hours, minutes, and minutes. So, it's the variety of choices that retail customers have nowadays. The fact that they have electronic access to all these markets, the fact that they have real-time data that is just streaming, and in fact, it's probably too much data. The fact that everything's gone to decimalization, and now the time frames, the expirations, the choices have never been better, costs have never been lower, and clearly Option Block has been around to memorialize that entire transition. And who knows what the future is going to hold. I think Alex has got some other interesting ideas on, he's right. The only constant we've got in this space is change. And retail customers have been the beneficiary of that, I think, over time.
Yes, the option block is going to be someday down the road. It'll be part of the historical record. Historians will come and they want to see what was going on in this crazy, tumultuous decade plus in the markets, and they will turn to the option block if the servers are still up. They probably will be. One more comment, then we got to bring in our newcomers here to the panel. Mr. Viceroy, sir, I know this is an issue. This near dated expiration is an issue that also resonates with you, sir.
Well, the issue that resonates with me, I mean, Black and Scholes, and yes, I'm old enough to remember them. Black and Scholes had made the comment early on when they were both still active that if you were a seller of options, what would be the ideal expiration? And the answer is 1 minute. If you were a buyer of options, what would be the ideal expiration? And you say, well, virtually forever. There's a problem with that because it starts to look like stock price. But I want to point out that here we are now, 20 years later than the evolution of electronic trading in the options market. And having worked at the exchange that pioneered electronic option trading, I will tell you the greatest asset we had was not our being a pioneer of electronic option trading, but the other exchanges just bickering with the floor community, the electronic community, about how to keep their floors alive. And in hindsight, that was a monstrous error. And if you recall, at one point after the ISE opened, we were actually larger than the SIBO in terms of daily volume without having the SPX. Now, the proliferation of exchanges is great, but it's also the fragmentation of exchanges and fees, right? Customers who are getting payment and trading for free, somebody's still paying those fees. You have 16 options exchanges today. None of them need to earn a fee to break even. None of them need to earn commissions, contract fees. They live off the OR fee, which, yes, is a fee. But you could open an exchange tomorrow, and if you're size of the smaller exchanges, the great work that's been done at MyX, the great work that's been done at Box, but they break even off OR fees. Yeah, you have to have trades to have OR fees, but the OR fee is part of this market structure issue that also needs to be examined by regulators. And regulators, God, I can say this now, this feels so good, are dinosaurs. They're just dinosaurs. They're not sheriffs, they're archivists. And that's one of the clear problems in the industry. And again, till Washington gets the courage, it's going to be that way.
And it's funny, Mr. Viceroy, you mentioned earlier the Fidelity Young Trader kind of program. It's like you knew, it's like you had insight into what was coming up on the show, because it's our 1,000th episode. Spectacular, listeners. Obviously, we can't contain it to just an hour. We can't just contain it to a handful of guests. More people want to join us here, including next up, we are joined by a man who made his first appearance on the show back on March 21st of 2019, known around the world as the Song of Ice and Fire himself, Mr. Colin Songer from the Fidelity Brokerage Services Trading Strategy Desk. Mr. Song of Ice and Fire, welcome back to the program, sir. It has been too long.
It's been way too long. Thank you so much for allowing me the opportunity to jump back on. How you doing?
We're doing good. We are having a good time. And it's not enough to have one joining us from the Fidelity Brokerage Services Trading Strategy Desk. Said that 5 times fast, because we are also joined by another gentleman who made his appearance a little bit after the Song of Ice and Fire, way back on April 17th of 2019. You know him, you love him as the last emperor himself, Mr. Konstantin VRANDOPULO, also from the Fidelity Brokerage Services Trading Strategy Desk. Mr. Last Emperor, welcome back to the program, to you as well.
Thank you so much. It's truly a pleasure and an honor to be back. It was very humbling when we got an invitation from you guys. So congratulations. We're very excited for you. Great achievement.
And we've been going around the horn here with all of our cohorts here. It's been over a decade. It's been coming up on 11 years, actually. September will be 11 years. 1,000 episodes now. So a lot of things has obviously happened over that time. Many infamous events in the markets. You guys were obviously on the show towards the latter portion of that time frame, but obviously a lot of things popped off when you were on the show. So I'm curious for each of you, maybe Colin, we'll start with you. What are some of your enduring memories of some of the events or things that you covered or talked about or happened when you were on the show, sir?
Well, we've had so many great discussions. One of the things that really stuck to me was when we talked about hedging and how people view it. I remember Rock Lobster jumping right in there. It was a great discussion that we had. And I'll tell you this, first off, congrats on such an achievement. That's unbelievable. I knew when I was part of it that this show was something special, but this is unbelievable. 1,000 episode, and every time I come on, I'll tell you, I can tell that option traders are learning something, because the topics that you bring to the forefront are fabulous. I would say the hedging was one of the ones that really stuck with me, but also when we had a general discussion about just general risk management, that's one of my favorite topics. And I know I'm very general in my answers, but I think conceptually, for some reason, that one stuck with me as well. I know it's very general and conceptual that everyone should know, but it's so important that I just thought it was a great discussion we had that day. So I remember that one as well. So those are the two that really stuck with me.
Yeah, it's hard to believe I'm old enough to have done a show with 1,000 episodes. I mean, I started this when I was like 8 or something, so it's hard to have a memory that goes back that far for 1,000 episodes. Mr. Last Emperor, same question for you, sir. You had a lot of appearances on the show. We talked about a lot of different things. A lot of things happened in the markets over your time here on the program. What really stands out and resonates to you, sir?
Yeah, guys, like I said, I'm humbled to be on here today. And the reason why I'm thinking back to, 2019 and a bunch of shows that we've done together, what stuck out to me the most is that you guys all have a tremendous amount of real hands-on options trading experience. And the way you break down some of the concepts that are brought up on every single show is unmatched in the industry. And, this year, especially so, as social media is becoming more and more popular, of course, what I'm noticing is that there are a bunch of imposters, right? The people who are, might not be actually very aware of what they're typing or writing or tweeting or posting, but pretending to be professionals with know-how and expertise. And I got to take my hat off to you, because you've been doing it for 10 years and you've been doing it steadily week after week with no fail. So that's what I would like to highlight for sure.
Well, I appreciate that. And I promised you all, listeners, we're going to get into our regular content. I also promised you a big special announcement. So let's kick all that off here with the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. You guys know the drill by now. We've done this, 1,000 times, where we break down what's trading out there in the markets. But before we get to all that, man, we have some great different voices and expertise to fill in on what they're seeing from different parts of the market. I've been telling you for a while, I'm teasing you. We got something big. We thought, what can we do to really celebrate this is a milestone we've never really hit on the network before. 1,000 episodes. Nothing does 1,000 episodes. Think of your favorite TV show. Think of favorite anything. Nothing does 1,000 episodes. Most podcasts fade away after 3 or 5 episodes. If they're lucky, they get to 20 or 50, let alone have anybody actually listen to them. To be able to do this thing reliably week after week, month after month, year after year, have all the great firms that we've had join us on this program over the years, including Fidelity, of course, most recently NASDAQ, Options House, then E-Trade, OX, then Charles Schwab, TradeStation. I'm sure I'm forgetting some, but it's been a lot of great firms, a lot of great support. But one of the things you folks have asked us for consistently, and we thought, what better time than now? OB1000 to kick this off. Since we launched this network over 14 years ago, back in January of 2007, you guys was like, hey, we like the podcast. You know, what more can we do to engage with this? What more can we do? What more do you have? And we've been asking, people have been asking for that for a while. How can we engage more? How can we do something with the network outside of what you guys have now? And so we thought, OB1000, we've seen so many new people join the network, so many inquiries of this type that this was the perfect time to launch this. So I'm pleased to say it is live now. The switch has just been flipped. So if you're listening live, you can go there. If you're listening after the fact, you can go there as well. If listening live, you're going to get a little bonus. So I'll tell you that in a second. But you can go there now as we unveil Options Insider Plus and Options Insider Pro. So what are we talking about here? Okay. Plus, pretty self-explanatory, like the naming. Actually, we had something else in mind. My little guy came up with Plus because he likes Disney Plus. I thought, it's not bad. It kind of conveys what we want. People are always asking, hey, how can I engage more? How can I become part of a network more on a more regular basis? These are for our people who like to tune in. They like to listen live. They like to engage on that front. And we have that there for you via Options Insider Plus. And, of course, what we like to do, we love to cater to our hardcores. So you folks there in the Plus, and all of our members really, are going to get bumped up, obviously, to the top of the line for any questions you may have. That's the first thing we have. We're going to have exclusive content for you folks, exclusive live streams. A lot of the live streams are going to be moving to this platform down the road. So if you really like engaging live and listening live, I encourage you to at least check out the Plus. Also, we're doing some fun, cool stuff for the launch window here as well. I'll get to all that in a second because the next tier is for the folks who are really super hardcore. They want to go above and beyond. There are pretty much pro or semi-pro traders out there already. And so we thought, well, we need a tier for those folks. And that's where we came up with Options Insider Pro. And this is going to be something unique. This is something that's really cool. We've kind of been cooking up for a while because obviously the network's going to be there. It's all there. You can enjoy all of that. This is going to go above and beyond. We're going to have exclusive programming now for folks on the pro level over there. So first off, we thought, what's something cool that people really like to do on a regular basis? One of the things people love to do across all of our shows is ask us questions. So we're going to codify that into a very special thing. We're going to have regular, probably weekly to start, but maybe more as it kicks off, Q&A sessions with all sorts of great options and derivatives experts from all over the globe. They're going to be beaming in. People are already beating down our door to be a part of this thing. So it's going to be really cool. So you guys on the pro side are going to be able to participate in that exclusively. Whatever the hell's on your brain, hit them up. It's kind of like your private, well, maybe not semi-private. Other folks will be in there with you. But you get your own kind of glimpse into what's going on in the market. So whatever the topic is on your mind, there'll probably be a lot of options. Maybe we'll smatter some futures guys in there. Maybe a couple of crypto folks in there as well. Who knows? We'll get some feedback from you guys about what you want. And it's going to be a great kind of unique session that our pro members will get access to. Also, you guys have been asking us for more shows, and obviously it's hard for us to produce more shows. There's a cost and an effort to that. So we're putting this in the pro tier. So if you guys want it, you want to subscribe to the pro tier, you can get it. We're going to bring back exclusive shows just for this pro tier, and including one of the ones you guys have been asking for since we took it off. It's going to be the return of Options Oddities. Yes, it's back. You guys love your unusual activity. So the first show, the inaugural show to kick off the pro tier is going to be the Options Oddities program. It's really cool stuff, the way we kind of figured out how to do this, because doing some sort of podcast that's kind of exclusive to an audience is a challenging technical feat. So what's going to happen when you go to our, by the way, I should probably give you the URL. It's theoptionsinsider.com/shop. You can go there and see both of it spelled out for you. /store should also work. And when you sign up for the Pro in particular, and you're going to get a cool link via the email, what that's going to do is give you access to an exclusive feed that's just for the Pro members. And it's going to be verified with your password and everything like that. So it's going to be exclusive just for you folks. So it's really cool one-off stuff where you're going to have your Q&As, you're going to have your initial shows in there, and it's going to grow from there. We're going to have members-only live streams, all kinds of other fun stuff. If you join on the regular level, people love to have engaging stuff, so we're going to put something in there. We're still working out some of the community aspects of it, which is why I want to stress this is still early. This is the launch window here. The content will officially go live on June 1st of next week. That's when we're going to start with the kind of probably a Q&A palooza, which will make it really fun. So we'll kick it off with that, and we'll have the options oddities returning later that week as well for your exclusive content. But when you sign up there, you get a login to the website. You get all kinds of cool stuff. We're also working on some other cool things out there right now, which will be kind of cool. So everyone who signs up now during what we're calling the launch window heading into this, I like to take care of you folks. You guys are out there supporting the network. I want to make sure you get taken care of as well. So a couple of things. First off, everyone who signs up now, you're going to be delineated as some sort of network founder. We're going to call you that. So whenever we have all the live chat stuff up and running in a different platform, you're going to get some cool icons to delineate that for you. So forever and throughout the history of the network going forward, folks who join up later, they'll see you in there like, oh, that guy's cool. He's a network founder over there. I'll tip my cap to him. He has some sort of rarefied status in the community. Secondly, you sign up now, I want to make sure this is it for you in terms of you'll never have to pay more. This is just the beginning. We're going to be adding a lot of new cool stuff to this. So it's going to cost us more to make. So the price is going to go up as we add more shows and more new cool things and more cool services and cool tchotchkes. So it's going to cost more. But if you sign up now and during the launch window, we'll probably give you a little bit of time in there as well. We're never going to change that for you. So as long as you're active as a member, whichever tier you want, then that price will never change for you. Also making it easier. People like deals. So you sign up for the annual, you get 2 months free. It's pretty cool. And we're going to do some pretty cool stuff. So one of the things people always ask us about, a couple of things. They ask us first, hey, we love your logo. Can you sell some kind of cool gear? And for the longest time, we said no, because it was exclusive to our team. So only people who wore it were like me and people on our staff. And there were a handful of like CEOs and heads of firms and exchanges in the business who loved our logo and asked us for shirts. So they scammed me for shirts. And some of our hosts got some as well. But that was it. There were exclusive stuff. But we thought, what can we do that's cool for this new offering that we have? So we thought, let's kind of combine some of the fun things that we have, the cool logo, the cool shirt love. And what have we been doing on the option block for months now is our cool 80s guessing game. And also the newest wrinkle of 80s wrestler intro guessing. So we thought, let's marry all that together. There's a store here in Chicago called Pro Wrestling Tees. It's kind of the mecca. We didn't even realize this until recently. It's the mecca for all of the pro wrestling online t-shirt universe. So you name it, Stone Cold Steve Austin, Bret the Hitman Hart, all these guys, they do their shirts through these guys down the street here. So he thought if it's cool enough for the Hitman and it's cool enough for Stone Cold Steve Austin, it'll be cool enough for us. So we went to them and they're going to put together some cool stuff for us that if you sign up now and you go to the annual plans, either a pro or of the plus, the pro or the plus, you sign up for annual now, we're going to make sure you get a cool thing you can't get anywhere else. So it's going to be a network founder shirt with some cool stuff designed by those mad wizards over there at Pro Wrestling Tees. Something you can't get anywhere else. Those people who sign up here in the launch window. And something even cool. I say, if you listen live, you can get a fun wrinkle as well. One of the other things we're going to do, which is really fun, people have asked us for a long time. If you were here in the studio, listeners, you would see it. I'm surrounded by all sorts of crazy tchotchkes and things from the world of options. We've been doing this for a long time. Firms have come and gone. They've sent us stuff. They've given us stuff. We've amassed stuff over the years at conferences. All of it's fun. Some of it's rare. Some of it is one of a kind, doesn't even exist anymore. The firm that created it or did it or used it is no longer around. We have a vault full of this stuff. Great, rare, one-of-a-kind options and derivatives-oriented items. So we're going to do something cool. So the people who sign up for the Pro, they're going to be entered every month. These are going to be kind of rare, bespoke, one-off things. And they're entered into a drawing every month. We're going to put together one of these options insider, we'll call it a trading crate, whatever you want to call it. Options crate, options insider crate, call it what you will. But it's going to be full of this cool stuff. And we're going to send it to one of you who wins. And we're going to do that every month. And we're going to do an extra bonus right now. Everyone who's listening throughout the rest of this show, maybe we'll extend it to the podcast as well. If you're listening now, you sign up for the pro. The first person to do that, and I'll check later to see who it is. The first person to do that will get the inaugural Options Insider trade. It's going to be cool. I'm not sure what's going to be in it, but it's going to be cool stuff. It's going to be hand put together by myself to make sure it's cool stuff. And so it's going to be unique, one of a kind. You really can't get this anywhere else. We can't really sell it, but we can give it to you folks out there for being loyal supporters of the network. So it's all there, theoptionsinsider.com/shop or /store. This is really the beginning of something I think is going to be really cool, really interesting. If you're just listening on the podcast and that's your thing and you're cool with that, that's fine. That's not changing. That's not going away. But if you want to be engaged more with what we do, and I know a lot of you do, then this is an easy way to do it. There's going to be more coming down the road, more shows, more offerings, more cool tchotchkes, you name it. This is just the beginning. But we wanted to get it out there for you folks now because it makes sense. It's OB1000. You got to have something cool to go along with it. And this is new. This is fun. We're really excited about this. So check it out, theoptionsinsider.com/shop. Look at the different tiers. It's all spelled out for you. If you have questions, hit us up. You know where to find us. And the first person who goes for the pro, you're getting the first ever custom, bespoke, one of a kind Options Insider trading credit. I am very excited. This is a cool moment for us here on the network. The first time we made really a big change, a big update to the network since we started doing this. So very exciting. Hopefully you guys like it. Hit us up with your questions, your comments, your feedback, your ideas, what you'd like to see, what you want more, all this kind of stuff. This is something you guys are going to be part of and helping to shape. You guys are the reason it exists. You're a legion of requests. You know, it's the old adage, ask for it and you shall receive. You folks have asked for it for 14 years. So we finally gave it to you. Took us a little bit longer, but to coincide with OB1000, what better, cooler thing is there than that? Check it out, theoptionsinsider.com/shop. All right, let's go around the horn and see who wants to chime in first. Let's start with, because he was on with us for episode 1. Let's go out now to the uncleist of Mikes, Mr. Uncle Mike, sir. A lot popping off here. First off, A, how excited are you about this cool new wrinkle to the network? And then B, a little bit of green on the screen coming into the show today. We got S&P, NASDAQ, and Dow all up pretty firmly. S&P up about 1.25%, Dow up about 0.75%, NASDAQ up, closing in on 2%, about 1 2/3% right now. And of course, all of our friends out there in the vol space taking a little bit of a well-deserved break. We had VIX come into showtime, or beginning of this segment anyway, about 18 3/4, down about 2.25 points. VVIX, a little bit shy at 118, about 117 3/4. VXX, 37.5, down about 3.3 points. And VolQ at about 19.25. That's down about 3.25 points from last show. So Mr. Uncle Mike, A, how excited are you for the newest addition to the network? And then B, what's catching your eye out there in the markets today, sir?
I'm very excited about what you got going on, Mark. I think that so for the audience, Mark was telling me about some of his ideas of where he's going to go with this a couple of weeks ago. And this is, you guys ain't seen nothing yet, quite honestly, in terms of where this is going to start and where he's going to evolve with this. Mark's a guy that he has his finger on the pulse of everything options, and with what he's going to be able to bring with the with this new platform that he has with the Plus and the Pro, I'm curious to see what actually comes about with this, because I think this is going to be a new evolution for online options education, the likes of which we've never seen before in this business. And I've been around for about 15 years in this business, and I'm excited to see where Mark actually takes this. So it's going to be very exciting. I think it's going to be pretty neat. And with all the tchotchkes that he has in that office, I've seen them. I'm also kind of curious to see where that goes as well. It's going to be a lot of fun.
It might be worth it just for tchotchkes alone. I'm just putting that out there. It might be worth it just for that.
For sure. So anyway, with that, in terms of the markets today, I was kind of hoping we'd have maybe another 20, 30-point rally in the S&P, so I could say my trademark saying on OB1000, but unfortunately I can't. But nonetheless, we are above the 42 100 mark on the S&P today. So we're definitely headed in the right direction for all of us bulls out there. So that's definitely a good thing. And the thing that seems to be, or the thing that is in the news right now a lot is Bitcoin. And so I've said what I have to say about that a lot in recent episodes, but today it's definitely moving upward. Futures are up over 6% on the day, so that's something that's moving upward as well. S&P, of course, up 1%. Crude oil up over 3% on the day. So we're in a day to where everything, a lot of the major asset classes are going in the upward direction, to where we have 10-year note is increased. So you have bonds going up, although not that much. You have crypto going up. You have the S&P going up. You have gold going up. So everything's going higher, and it will be definitely interesting to see tomorrow where the money comes out of when stuff goes lower. Because with the VIX going down, I just have a hard time believing that many the buyers are coming in, or where the money's coming from. I have a hard time believing that just people selling all of their VIX products. So that's what I'm seeing right now. The other thing of note right now is that note saying with the air quotes is that the 10-year note is staying relatively stable. We're at the levels with which we are. Yields have been fairly stable around these levels. They continue to be. Very excited about that being the premium seller with which I am. Would still like it to come down, the note itself to come down a little bit. I'm still waiting to get filled on some short premium right now, but I can be patient. So we have that happening. And I think that with where we're at in the market space right now, we're knocking on the door of all-time highs again. And so just to kind of put into some perspective, all-time high on SPX 4238. Right now, we are at 4208. So we're 30 points away from an all-time high. And so we've been kind of choppy since we made that all-time high a few weeks back in the marketplace. And the fact that we're making another run at it right now, I'm concerned that we might just be facing a double top, but I'm also excited in that we might be breaking out. So it's kind of a very key point in the marketplace right now. What I'm personally doing to prepare myself for this, I'm definitely in my aggressive strategy. I'm definitely more a long premium buyer with call spreads. And of course, because of compliance, I can't say exactly what I'm in. But on the S&P, I'm more of a long call spread guy because of the fact that if we are facing a double top and we are going to be coming down, we have a very great amount to come down because we are at such great heights. And I really prefer not to get caught a lot of short premium at this point in time. So that's how I'm playing this market at this point in time. And in terms of just other things such as the covered calls and longer term stock holdings and that type of thing, no changes immediately with that. But in the short term, definitely more of a premium buyer in this market with very limited risk and very close risk management, of course. And that's what I'm looking at right now in this market.
Well, that didn't take long. We already have a winner, listeners, for our trading crate. The first ever. I'm excited to put this together. This is going to go out to Glenn from my old stomping grounds of Connecticut. I was from the middle of the state up there in Meriden, a town you've probably driven through on the highways. That's pretty much our only claim to fame. Congratulations to you, Glenn. We're clearly a person of exceeding taste. I see you also went for the annual. So you know what? I said it, everyone who does the annual also going to get a sweet network founder, cool custom design thing from the Mad Wizards over there at Pro Wrestling Tees. So look for that as well. That I wish I could show you what the design is going to look like, listeners, but we're still kind of working it out. But know that it's going to be cool, and you know that it's going to come. And we're going to actually have down the road for folks. You can't buy this one. This is going to be the exclusive for the network founders. But we are going to have, we actually do already have a store with them. So you can go look for, you know, Bret the Hitman, or let's say the Undertaker or Stone Cold or us. Actually on their non-wrestling version. We're going to have some other cool shirts out there. People have been asking us for day one, can we get that logo? It's really cool. So we're going to have that stuff. But the stuff we're talking about now is going to be exclusive for you network founders out there. The one thing I wanted to make sure when I did this was, like, if people are going to pay us money, I want to make sure it's awesome for you guys. I want to make sure it's fun. It's worth everything you're doing. And so we're going to work our hardest to make sure it's fun and exciting. So congratulations to you, Glenn. You are the soon to be the proud owner of the first ever Options Insider Trading Crate. We're going to have one of those go out a month now going forward to all of our pro members. So get in there. Pro members get entered into that drawing every month. And of course, you folks out there who sign up for anything else annual today or in the launch window, I'll extend it. I'll be nice. You can get that sweet exclusive Options Insider network founder cool shirt from those mad crazy designers. I'll just keep going around the horn. Let's go out to the other guy who was with me here from episode 1. We've upgraded him a little bit. It doesn't sound like he's coming through a tin can anymore. Mr. Meatball, A, how excited are you for this newest iteration of the Options Insider Radio Network? And then B, what's lighting up your tape out there today, sir?
Mark, congrats. I'm super excited. I think people are going to love the service, and they should. Super exciting, super fun. So I think that you're going to see great success there. Very happy about what's going on with that. This market, how about it, huh? They seems to be really off to the races today. I have yet to see any real reason of stopping. And, we could, who knows where we're going to end up when all is said and done, right? I mean, it could definitely be one of those just continue to go and go and go. And, who knows how far it could take us. But this market is really hot, and vol is getting obliterated kind of unilaterally, which I think is interesting. That's been what I've kind of seen. Aside from that, I would point out that I do think it's interesting the Russell 2000 is as soft as it is. That's definitely, I think, should be a little concerning to people. But other than that, things look pretty good.
Things do look pretty good. Let's go in order of their appearances on the show here. So next up was the Viceroy himself. Mr. Viceroy, like I said, you're hanging your hat over there at EXITOS now. So a little bit different perspective, maybe looking at some larger, more macro type things. What is lighting up your tape out there in these crazy markets these days, sir? And C, how excited are you for the new Options Insider Plus / Pro, sir?
Well, Mark, congratulations. I think it's brilliant. And I think the opportunity to provide a wider, sounds like higher denominator content is always welcome in the industry. Good quality education in this industry has always been great. And you're clearly, from a balance and ethics standpoint, the top of the food chain. So kudos, and I think it's a brilliant idea. I will also hold out the offer that I have cases of original SEBO stuff. If we ever get together, I'll bring you the Whole Foods shopping bag full of sweatshirts. I may even have some of the original Peregrine Falcon ties.
Ooh.
But
I'll take some of that, Alex.
So we'll figure it out. You guys have my phone number. Call me. What do we look at? Well, understand we trade the world. And that sounds like an exaggeration, but we look at real interest rates, which are still negative worldwide. And that's a concern. So I don't think these markets continue forever. And I think, candidly, the way most of us think about markets, we think that the market got to a point where we should have lightened up. And then, of course, 2 weeks later, we saw it 5% higher. And, it's kind of like Bitcoin in the sense that every time it drops a little bit, you either say, this is the end or this is a buying opportunity. And but I think this market is fragile. We trade, we hedge 3 very large concentrated stock positions, which are statutory for us. One is in Europe, one is in the Gulf, and one is in Asia, which is, very ironic. So we look at fundamentals. We look at the price of oil as a measure of economic activity, and we look at real interest rates. And the real interest rate thing has had me scratching my head for a few years. And I think at some point, some of these central banks are going to find religion. And at that point, there are going to be some enormous trading opportunities. We look at volatility all the time. We have a vol desk at our shop here in the US. We have an SPX desk. So we look at indexes a lot. We especially like to trade where the banks are making markets upstairs so that we can have a partner when floor liquidity isn't everything you want. So that's VIX, SPX. We're also looking at the Amazon deal. Amazon was always one of my favorites when I was first on the show. And although we personally don't have a position in it, my family owns a great deal of it. And I get the phone call every couple of days. How are you? How are the kids? What do you think of Amazon? So we're looking at the Amazon deal, the Amazon MGM deal. And as my son who works from home now, as many of us do with the pandemic, my son came down. He says, "Do you think this is going to move up the Bond movie?" And I said, "Actually, no, I don't think it will." But interesting to see Amazon make that big a commitment into content in one block. So that's what's lighting up our screens.
All right, Mr. Viceroy, thank you for that. Now moving out to the guy who joined us next here on the show, the rockingest of lobsters, Mr. Rock Lobster. A, how excited are you for this newest wrinkle to the network? And then B, what's lighting up your tape out there in this day of markets rallying and vol eroding, sir?
Well, clearly, I think the options oddities concept is brilliant because I think I hosted that show.
Yeah,
with
you were a big fan of that show. What do you think about it coming back, sir?
I think the kind of the format we have where we looked for the trades and then created ideas out of the trades. I thought that was a great educational piece that a lot of people at TOS, a lot of the people in the room liked. Like, okay, well, how do you make an idea out of unusual activity that it's more accessible for the average person, so they have to take maybe like the big stab, or that some of those trades, because we broke down a lot of those trades. So I think it kind of made that that huge institutional paper a little more accessible to the average. So I think people will like that. And because as a floor trader, you're always into your own volume, right? Like you could remember the customer that bought 1,000 calls 4 weeks ago, right? You were 100% locked into where, I knew all the positions of everybody in my pit. Like I wanted to make sure I had the idea, like if I needed to lean on another market maker in the pit, I had no trouble doing that at all, of course. So if this is all so this was all like what I would call just conditional stuff, things that were around you, the volume that's trading. And as a floor trader, it was important to know it. And I think if you could, teach people how to look at volume and kind of look at the flow, Mark's been doing that to great effect at Option Pit with Robinhood and with Sharp Bets and all the little goodies we have to kind of look at the volume. These are good things for traders to look at and to understand when that volume moves the needle. So I like the idea. I think it was probably ahead of its time, and it, I don't know if it's ahead of its time now, but it's time for it on the network. So I like the premium idea a ton, and I wish you success with it. As far as what's lighting up my tape right now, this is the level that we kind of get to and stop. So I'm wondering what the new and shiny object is that's going to push the market higher. once again, I think Mark has said this, I don't know how many times, so we're making close to another high in the SPX without a corresponding low in vol, which is still kind of, I would say, a relic of the COVID era. It's to all of the stuff that has given us the market we have. A lot of, I think probably excess liquidity from the Fed. They got to pull it away. Alex said some central bankers are going to get some religion soon. I do not disagree with him. It's just when the tide is eventually going to turn where they have no choice. At least in this country, those bond markets are moving around and rates are going up from January. So I think there is tremendous growth, with the internet, and all of the COVID kind of showed like the run rate and all the upside ability, and there's, countries all over the globe getting more connected to the internet, stuff like that. It's going to be a lot of growth, but there's definitely some central bank issues and stuff like that. There's crazy U.S. government spending and all these things. They gave us pause. We just remembered, thinking back when the U.S. got their rating cut. Like, where is S&P right now? I mean, if they were going to cut the rating back when I first started doing the show in 2011, right, 2012. Where are they now? Like, the U.S. basically should be a junk bond at this point. So I'm not quite sure. I guess the rating agencies have just given up trying to rate sovereign debt. So those are very odd currents, but at the same time, a lot of, huge growth. And one thing too, it'll be interesting to see if like the Amazons and the Zooms of the world can keep up the breakneck growth they had last year. Once people start getting a little bit back to normal, maybe they go back to the hyper growth kind of goes away, and the competition sets in. A lot of competition for Amazon now. Amazon and Walmart and some of these things are coming through. Shopify, Zoom. There's like 8 different platforms that compete with Zoom. So there's lots of like all these names that were hot, and it remains to be seen whether they stay as hot as they were over the last year. I mean, tellingly, Amazon has, I think, it peaked in August of this year, and it hasn't seen that high price since, I believe. So, again, very interesting to see how this all shakes out. But again, higher SPX, and we still have a VIX at 18. I mean, there was a time when 18 VIX was pretty high, where we could go, wow, and now it almost feels like a bounce area to me at this point. So, I mean, I think that's the market that we're still living in. It does feel like we're in a little bit of suspended animation with equity prices and stuff, considering all of the dislocations around the world, supply chain, and everything. So, again, I think from a vol point of view, we're still range bound. I don't know when we're going to see a 12 handle on the VIX. To be honest, I'd be surprised if it happened this year, given all the current trends. It would surprise me. That doesn't mean I would complain about it, but I think it would be a surprise. So until some of this gets sort of a little more clarity on like the massive government spending and all this, COVID kind of going away or getting, is it really going away? I kind of feel like watching Mickelson win the PGA, like, and seeing that whole crowd. Clearly, they didn't give a damn about COVID. And Phil was playing they couldn't even social distance when the guy was hitting on that par 5. I think he was drilling a 4-iron. So, and people are only like 6 feet away from him, if that. So, maybe, I think, again, that was a very positive sign going forward. And I think the market's already been riding that. However, vol has not abated to what we would used to see. So, I got to go with watching this VIX watching the VIX for 18 years and watching vol for 30 years. I like to see a little bit more cause and effect there when it comes to vol and all-time highs in SPX. So we'll just leave the door open on that.
Speaking of leaving the door open, I know our next guest has to run pretty soon, so let's get to him. Also, he's joining us in order that he joined us on the show. Mr. Rich, sir, I know this has kind of been a boom time for you guys over there at Nadex. The short duration stuff kind of just blowing the doors off. I can only imagine how crazy this will be. So, sir, what is lighting up your tape over there at Nadex these days?
Please hang up or press the
All right, let's get rid of Todd because he's having issues. Meanwhile, Mr. Rock Lobster, sir, what is lighting up your tape out there, sir? And what do you want to leave our audience with here on this epic spectacular, sir?
I just wanted to be the only person that didn't have my mic on.
I know. I cannot believe I didn't. I did that. Mark, it's been so great doing this show, being on for so long. I really enjoyed it. I think we've helped people make a lot of money, and certainly more so help people avoid losing a lot of money, and help people become better traders. And we love what we do with you guys, and we can't wait to do the next 1,000.
There we go, Mr. Rock Lobster. I know you have to hop off too. Any final thoughts for you, sir?
I'm very happy to be on the network, and it's been one of the most fun things besides talking to my students that I've done over the last 10 years. I really enjoy the show, and I think, this is the kind of education people need. It's good to hear how things work for people that have gotten their noses kicked in 4,000 or 5,000 times. And we're happy to let everybody know how things work and how they don't work, and hopefully it'll make their trading better. So here's to another 1,000 shows for you, Mr. Longo, as I pop off.
Thank you for that. You'll have to miss the grand looking back on 10 years of the odd block here. But let's see if the folks at Nadex have paid their internet bill. Let's go out one more time now. 8th time is the charm. Mr. Rich, are you there, sir? Can you hear me? All right. Instead, let's go on out now to the folks over there in the land of Fidelity. They've been waiting patiently. I know a lot's popping off in your neck of the woods. Maybe we'll start with Konstantin. We'll mix it up. What's been going on out there? What's really lighting up your tape out there in the land of Fidelity these days, sir?
Yeah, Mark, I wanted to echo, obviously, a lot of the astute observations of the guys before me, but I am paying very close attention to the relationship between growth and value right now. I know that we're talking about maybe knocking on the door of brand new all-time highs in the S&P or a stone's throw away from it. I am looking at the Russell 3000, which is a holistic index of all small caps, mid caps, and large caps, versus Russell 3000 growth versus Russell 3000 value. I find it very interesting that growth really started to outperform since the morning of the 19th, which, was effectively the most recent bottom that we saw. Growth has been outperforming by about 2 percentage points to the upside. And I do really believe that we cannot probably create or make a sustainable new all-time high without growth participating in the rally. So it's a good sign that growth is doing what it's doing right now. Value is still going higher as a broader index, but at a decelerating rate. So that's what's kind of, catching my tape. That's what I'm looking at. Obviously, volatility coming down, and VIX again, being a teenager is probably a good thing. We'll have to wait and see if the June future follows sub 20. I don't think that I've seen the June future sub 20 in quite a while. So that's something that I'm watching.
All right. I do believe the 8th time is the charm. I think the folks at IG finally paid the internet bill. Mr. Rich, are you back with us, sir?
I am back. It's in my neighborhood. This is what happens when you work in your basement during a pandemic. At the same time every day, for some reason, the internet goes out for 30 seconds, and then everything has to reset, and then it comes right back. So what are you going to do? What are you going to do?
Well, as I mentioned before, you so rudely left us, sir. This has got to be just crazy hot times for you guys. I know the retail segment is very active. Your specific niche of the retail, the, shall we say, uber short duration is just exploding. So what's been lighting up your tape? What are your folks trading over there at Nadex these days?
Yeah, well, first, I want to say in regards to your new programming, certainly IG gets the fact that premium options content is valuable. I mean, right? IG, I work at Nadex, but I also work for IG, and they just spent a cool $1 billion to buy Tasty Trade, and a good chunk of the value of that is that Tasty network. And believe me, the value for premium content is definitely out there as more and more retail traders flock to the markets and look for some help navigating those waters. In regards to what we're seeing at Nadex, a lot of the traders have been focused on the economic recovery. Right, that's been a driver for everything. What's going to happen as the economy recovers? A lot of people have been flocking into our oil contracts. Oil is a supply-demand driven product. As economic activity picks up, as people come out of their basements and start getting in their cars and going someplace, we're seeing traders expect, the demand for oil has been increasing. The question then is what happens on the supply side of that equation? And a lot of folks don't realize that, the U.S. actually, we produce a lot of our own oil. We're actually an oil exporter. So oil's been very, very hot in the economic, as the economic recovery continues on. But we're also, people are paying attention to inflation, right? That's the other part of what's going to happen is that going to force the Fed's hand? We're seeing that play out in our gold contracts as gold continues to ratchet higher in its price. I mean, there was a time, we earlier we used a Lord of the Rings analogy, the Eye of Saros. Well, there was a time when gold couldn't get through $1,800 an ounce going back to the upside. It was like Gandalf at the bridge, you shall not pass. And it was not going to let gold get through 1,800. But when it pushed through 1,800, it took off. And, I think a lot of people now are kind of balancing what is going to be the store of, what's going to be the currency of reserves. Our foreign exchange contracts at IG, our products at Nadex, all around foreign exchange, the U.S. dollar has gotten hammered. Massive weakness in the dollar. I mean, you look at the U.S. dollar to the Canadian dollar. Back in March, it was up $1. It was above 145. It's now down at 120. I mean, the U.S. dollar's just gotten crushed, and that's been interesting. I mean, that's Canada. It's making it expensive for Canada to export goods down to the United States. And one of the things they export is lumber. So we're seeing, all this inflation in housing costs. We're seeing inflation in energy. The inflation numbers that were running a little hot. A lot of it was really the energy sector and of all things used cars. But as you see inflation tick up, will that force the Fed's hand and force interest rates up? It's going to get a little crazy. It's going to get a little crazy. There's the short-term volatility is definitely out there, and that's what people are looking at. I mean, it really is. It's all connected, right? It's like the hip bone's connected to the knee bone. Everything's connected. So as we watch Bitcoin fluctuate, as people try to make Bitcoin the store of reserves, I mean, that would absolutely decimate the U.S. dollar and take down the U.S.'s economic influence. I don't know. We'll see how it all plays out. But then you do see that inflation kicking up gold. You see it kicking up the price of oil. And ultimately, how is that going to affect the entire economy? And we'll eventually see that play out in equity indices. But over at Nadex, it's every day there's something that's jumping, that's moving, that's short-term volatility, and we've got a lot of our traders kicking around the binary options as well as our knockouts and call spreads. So it's been some busy times for sure.
I'm glad to hear it. Speaking of busy times, one thing I did not expect I thought this would be popular, what we were talking about today, the Options Insider Plus and the Pro. But we obviously never have offered merchant functionality before, so apparently it's been too popular. You guys have overwhelmed our system. So I'm getting some reports that some of your orders have failed or bounced. So if that is the case, you go back in, do it again. We have fixed the issue there now. I'm getting reports from behind the scenes that everything is working again. So I'm glad to see you guys like it. And tell you what, just to make up for that little hiccup there, I'm a man of my word. So we'll go above and beyond. One more. We'll do it. One more super crazy exclusive Options Insider trading crate. So if you had an order, get it back in there if it failed. Or if you haven't ordered, get in there right now. It's a cool thing. So we'll probably have to just do the annual on the Options Insider Plus, or if you go Pro, one of those two, will get a second exclusive Options Insider. I'm looking around right now as I'm talking. I'm getting excited about the things we could put in there. So if you order bounce, get back in there, or if you haven't, get in there quickly. I'm going to go pretty quick and do the annual plus or the Pro, and we'll put together a second cool. That's the kind of nice guy I am. These things are fun and they're exciting. So we're looking forward to all this. Let's keep going around the horn. Let's go out now to the Song of Ice and Fire himself, Mr. Colin. What's lighting up your tape over there in the land of Fidelity these days, sir?
Yeah, there's definitely a lot of focus on inflation. I mean, that's really what I've been watching, especially with some of that economic data and some of the puzzling results that we're getting, but maybe not so puzzling, as well as lately just seeing the onslaught of buying going on, with the market being driven up, but also weird part about that is also bond prices getting bought up as well. So usually they work inverse, and right now they work in tandem, which means something's got to give. So that's going to be something I'm going to be watching. Interesting enough, the price action in the S&P where it was bouncing off that 50, it gave it two shots and still hasn't seemed to kind of break through, and it bounced back above that 20-day moving average. So it's going to be interesting to see where it goes from here, see if it's going to actually get all the way to test that high and create a new high, or is it going to reverse and try to see if it can test out that 50 again to try and see if it can break through. So that's something really interesting to watch over. And it's funny you mentioned inflation and the impacts that it has. That's something that I've been really monitoring lately. And I'll tell you this, in terms of the new services you're providing, I mean, with the depth of knowledge and versatility, as well as the experiences, as Konstantin stated earlier, with the guest speakers and the hosts that are on there, and yourself as well, the knowledge that you guys share with everyone is just so valuable that a trader can take that in and improve their own trading. Not necessarily to, maybe you don't do that very trade, but just to hear the knowledge and people shared experiences. I know that I take that in and I improve myself as a trader with that information. And I know listeners that do the same. So this sounds like a great opportunity. With that, certainly we do have some insights of what some of the Fidelity customers are trading if you're interested. I'll save the top dog for the last emperor because I don't want to take his spotlight because he's a superstar. But we do have some interesting names on here, and then not so interesting. So Anovis Bio was something that made the number 2 spot. That's right, the number 2 spot on the list for Fidelity customers based on last night's closing trades, where right now it's at $57.50. It's about $2.50 down. They did announce pricing of their public offering, which they're going to do 1 million shares at $50 per share. Interesting enough, with this particular security, 49% were buy orders and 51% were sell orders, based on what was entered. And right now, as with that particular chart, when I look at it, on Friday, it hit almost $98 per share. Now, if you go back a month, it was trading in the 20 range, and it hit 98 last Friday. And today, with it now kind of sitting in that 57 range, obviously it's pulled back from that huge spike that happened on Friday. So still above all its moving averages and outside those Bollinger Bands. In the next, and batting at the number 3 spot was Apple. Now, no surprise there, obviously. But one of the headlines that is something that caught my eye was Epic Games faces Apple on final day of courtroom battle over the monopoly claim. So kind of begun ongoing. Now, if you look at the buy to sell ratio, 66% of the orders entered were buy orders and 34% were sell orders from our Fidelity customers. Apple itself, now, obviously with technology doing pretty well, Apple's kind of following suit, trading at 127 spot 87. It's up $2.45, which is almost 2%. But when you look at that chart, a couple of interesting things about the chart is that it is above its 200-day moving average, but it's starting to get squeezed because it's sitting right at the 20 and 50 level. So the 20 and 50 are starting to push down that price. That price is sitting between the 20 and the 50 and that 200-day moving average. So it's going to be interesting to see how that plays out. And in the number 4 spot, obviously in the cleanup spot, you got NVIDIA. Staying with that same theme, NVIDIA, interesting enough, had 64% of its orders based on last night's close were buys, 36% were sells. Currently trading at 627 spot 69. It's up $28, which is 4 2/3% up. Now it's above all its moving averages, and it's approaching that top Bollinger Band with the strength that we've seen. And interesting enough, we go back last week, it almost looks like it just pole vaulted off the 200-day moving average and has just pushed away through the 50 and the 20. So those are the number 2, number 3, number 4 spot. And I'll leave the top spot to the Last Emperor.
All right, Mr. Last Emperor, he kindly doffed his cap to you, allowed you to have the fun spots. So what are the top spots over there at Fidelity, sir?
Yeah, so the top spot is Tesla. And Mark, the reason why I wanted to make sure that I'm covering that is because when I was joining the show for the first time in April of 19, that kind of was the time when Tesla started its, relative parabolic ascent. As you remember, I'm sure we've had plenty of discussions around options trading in Tesla, but it's interesting, obviously it was the number 1 spot or the number 1 traded security at Fidelity from the equity side, 55 buys to 45 sells. And obviously the stock is up around 5.4%, 5.6% as we're speaking right now, continuing to show strength and leadership right now. What's interesting to me is, I'm thinking back to some of the news around Tesla. So originally, and this is obviously post-split, but the inclusion to the S&P 500 was announced in the middle of November. And, the stock was trading at around $400 a share. The day preceding the inclusion, which was the 12th of December of 2020, stock traded and closed at the high of the day at $695. And we're trading right now at $612. So since the inclusion of the S&P 500, the stock has actually been down. It has been underperforming the S&P 500 since the inclusion by about 20%. It has been underperforming the consumer discretionary sector that it's a big part of, obviously, by around 15%. It's down 32% from all-time highs and around 14% on the year. So regardless of how you slice it, how you look at it, it has clearly been in a painful, momentous decline with a lot of chop. What I want to point out is the fact that implied volatility in this market, as I'm looking at it right now, looking at 30 days, implied volatility is at the lowest level. It's in the 0 percentile right now, which tells me that it's been at the lowest level in the past 52 weeks. And if I go back all the way to try to find this 50 area where it traded there last in implied volatility terms, it was all the way back in December of 2019. So the stock is down significantly. Implied volatility is down significantly off of the highs. Obviously, stock is making a run for it right now, bouncing off of a Pretty significant trend line, in my opinion, connecting, by the swing bat method from the lows in August, September, November, and extending that out, but basically bounced right on it, as we traders like to say, to the penny. Trading above the 200-day moving averages right now for today, trying to hang in there. So it'll be very interesting for me to see, what happens next. Sort of looks like it's building this symmetrical triangular formation pattern. Usually when these patterns break, especially if they're of this size, the underlying does tend to follow through and does tend to go. So looking for the downside, right? Obviously against the low of around 540. If price starts getting accepted down there, we need to pay attention. If the price breaks through probably somewhere around the 635 to 640 range, you will be getting pretty close to the top of the downtrend line. So a break and an acceptance of price above there, we could see some legs. So in either way, right? Either way, the stock bounced exactly where the bulls wanted it to bounce. Options are relatively cheap to their historical prices, so that's what I'm watching, and it's obviously the top name. It was the top name as of the close on Friday, and it looks like everyone who was bullish this stock at Fidelity, well, at least for the time being right now, got it pretty correctly. Up 5.4% is nothing to snuff at.
Nothing indeed. Let's see what the markets were up to today here really quickly. Obviously, we're doing this a little bit later than we normally do in the show, about an hour and a half later. So these numbers are going to be a little bit higher. It's a decently active day out there, all things considered. VIX at about 387,000 contracts as of a few minutes ago. That's not that far away from its ADV. Not sure if it's going to make it in the next hour of the day. Maybe. The ADV is about 554. SPY at about almost 3.5 million. ADV about 4.5 million. So it looks like these indices are going to maybe struggle their way to their ADV by the end of the day, probably be a little bit light. SPX at about 1.1 million, the ADV about 1.3 million. The Qs just a tick under a million contracts, the ADV almost 1.4 million. And IWM bringing up the rear, only 290,000 contracts on the small cap tape today. 550 is the ADV. Let's go to the single name most actives. What did I say at the top of the show? Apple has been the big dog since we did this, outside of a rare handful of days. Today is one of those days, listeners. Cost you right now 224,000 contracts to break into the top 10. That gets you all the way to what the old timers call telephone. AT&T, number 9, NVIDIA, 228,000. Number 8, Facebook, just a tick shy of 250,000 contracts. Number 7, Palantir, 309,000 contracts. Number 6, good old Ford, 351,000. Number 5, it's NIO, 380,000. Number 4, AMC, 487,000 contracts. Now we're getting up there. Number 3, it's Space with 506,000. Number 2, yes, I said number 2, it's Apple, 669,000 contracts. And the big dog today, as the folks over there at Fidelity informed us, is Tesla, closing in on 965,000 contracts. So a rare light day for Apple and a pretty strong, dare I say it, a robust day for Tesla. In terms of what's biased out there, it seems like we have a tie with both AMC and NIO coming in at 71% of their paper, both right around 400K, AMC closer to 500K, with 71% of those both going up. On the call side of the ledger, I'll hold off on earnings move and earnings season reports. You guys can check those out for yourselves over there, theoptionsinsider.com, after you're done breaking our /shop link. Thanks for that. And then we'll keep on rolling into a really quick look back at the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right. Unfortunately, we ran so long that Rock Lobster had to go. I wanted to get his thoughts on this as well. He's been one of the ones who's been doing the odd block with me the longest, but we'll look back on this really quickly. I'll get his thoughts later this week, too, on what are some of his memories. But over the course of this 1,000 episodes, you're talking roughly 3,000 odd block names, even though we didn't do exactly 3 every show. Some were look backs and everything. So it wasn't always 3 new ones, but somewhere in the ballpark of 3,000 names we have profiled here on the show. So it's kind of hard to pick the favorites. But for me, again, I'd be curious to get the Rock Lobster's thoughts. For me, a couple of trades stand out. First off, it's one of our infamous ones going back to October 26th of 2015. A trade that both I and the Rock Lobster roundly criticized, roundly mocked. It turned out to be one of the best trades in the history of the odd block, and certainly one of the ones that we have the egg on our face, so we wear it with pride. We take our lumps like men here on the show. At the time, we profiled someone coming in and gobbling up calls in Men's Warehouse. You probably remember this one if you've been listening for a little bit. They gobbled up the Dees 41 calls for $1.65. Back when the stock was 38 and about a half, and they paid $1.65 for those, which is pricey. And then on top of that, turned around and they dumped the stock, pretty much delta neutral, 756,000 shares of it, about 38.56. And we said to them, why are you doing this? Why are you selling the stock? We didn't like any of this at the time, and it turned out this guy was pretty right. He came back and closed them out again less than a month later, November 19th of that next month. He closed these bad boys out, came in, bought the option, or sold the options out for 2 cents. You might say, wait a minute, he paid $1.65 for those bad boys, nearly 20,000 times. He sold them out for 2 cents. He took a bath on those, and you're right, took a bath about $3.3 million on the options. But that isn't where he made his money. He's selling the stock, which was the portion. We said, why are you doing these delta neutral? It doesn't make sense. And that turned out to be the part that made a lot of sense, because the stock, when he closed out these calls, was at $22.12. So he dumped the stock at $38.56, bought it back at $22.12, roughly $750,000 time. Yeah, he did well. He made about almost $12.5 million on the stock, total of close to $10 million on this trade. So again, this has a couple of lessons to it. First off, when we mock it, it still could be a decent trade. B, doing things delta neutral. That's something we don't often get to talk about on the show, but that is something that goes up with a lot of these big trades. They do have a stock component to them. So bear that in mind when you're talking about them. And then C, it just stands out for being a fun one that we made fun of until we did it. But you know what? We took our lumps. We can own up to it when we're not right. Another one that stands out to me, this is a recent one actually. We called it at the time the craziest odd block trade we'd ever seen, just probably more for the size than anything else. It was kind of ridiculous. And you might remember it. It was just this year. Of course, a lot of crazy things happened this year. But we'll go back to February 11th of this year when we profiled just this crazy call palooza in Denison Mines. This was shall we say, a little uranium mining and manufacturing type name. They're trading around $1 at the time. So people just piling in to the March 2.5 calls, paying a quarter, just gobbling up 14,000, 7,300, 1,500, a total of over 200,000, 214,000 to be precise, went up by the time we talked about them on that show. If you were wondering, listeners, this was a 325.5 volatility. So yeah, those were pretty rich. It actually got higher. They got up to 367 volatility out there. So folks are just paying through the nose for these ridiculous, the stock had to more than double for these calls to even become relevant. So it was a pretty juicy buy ride opportunity. There's not many of these trades that I come in and fade and take the other side out. I took the other side of this one pretty hard, and it worked out pretty well because the stock never really got close to that. These calls, it seemed like the market woke up this one too. This was absurd because they didn't stay at a 368 volatility for very long. They got crushed over the next couple of sessions, and you could have bought them back for a nickel within a few sessions. So it was one of these ones where it was crazy. You did all right on the stock. You definitely did well on the options if you piled into this one. Just for size, just for outlandish vol, and for the ridiculousness of it. I know, Mr. Viceroy, good thing you weren't on the show because I know how much you love trading options on a $1 name, but still, nonetheless, craziness afoot. Speaking of craziness, 1,000 episodes. We got to do something fun for the dose of strategy. So without further ado, let's get to the strategy block 1,000.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody. It's that time. Uncle Mike, I hope you're ready. You got 999 of these things in your back pocket to prepare you for today, the great, dare I say it, the momentous day of the option block, or I should say the strategy block, also the option block, but indeed the strategy block 1000. What do you have in store for us today on this momentous episode?
Well, a couple things, because we've been talking about memories of what we've done with different segments of the show. And for the strategy block, the first one that came to my head of the memories with which I have for the strategy block, and maybe you remember this, Mark. I remember it was Christmas season, and for whatever reason, I just got inspired in some way, shape, or form by the 12 Days of Christmas. And so as you guys were doing the odd block, I'm like, I got it. I thought, this is what I can do. And I think I did the 12 rules of option trading. And so I sang the 12 rules of option trading. I don't remember them all off the top of my head, but it was literally done. It just all came to me at once. I've never had anything like that happen to me ever. And the only part I remember about is instead of 5 golden rings, I always had risk management. And so I'm not sure if you remember that one or not, Mark, but that was probably one that definitely rang a bell to me for the memories of the strategy.
Whenever you sing, it certainly beats into my brain, for better and for worse, sir.
For sure. So anyway, without further ado, what I wanted to do for today is we'll have a little bit of participation from the rest of our guests, and we can do a strategy block a little bit different today, being as it is OB 1000. And what I want to do is talk about the most basic of all strategies, in that if I am bullish on a stock, I can buy a call option. I'm going to explain the advantages and disadvantages of being bullish on a stock and buying a call option. And then any of our other guests can chime in and say what another strategy of what they would do if they were bullish on a stock, whether it's sell a put spread, sell a put, buy a call spread, buy a stock, sell a put, whatever the case may be. But I'm going to go ahead and go first. So let's say you're looking at XYZ stock. XYZ stock is trading at $50 a share. And one thing that you could do is you can buy the stock at $50 a share. Let's say you wanted to buy 100 shares. It'd be a $5,000 risk. Should the stock go to zero, you're out $5,000. Now, the other thing with which you could do is you could buy a call option on that same stock. I'm going to say you're going to buy a 3-month call option, and you're going to pay $3 for that 3-month call option. 50 will be the strike, of course, and you can go in the money or out of the money, but for my example, 50 is going to be the strike. You're going to buy an at-the-money call option 3 months out because you're bullish on the stock. Now, let's go through the advantages of it. The main advantage that exists by buying a call option at the money in lieu of buying the stock is that if the stock were to go to zero, instead of losing $5,000, you're only going to lose $300 because that's what you paid for the call option. The other advantage is that you could create leverage. Let's say that if the stock were to go from 50 to 80, and I'm just making up crazy numbers right now because I can, it's my segment, then instead of just buying one call option for $300, you could buy 2 call options for $600, have nearly twice the potential upside of what owning the stock would be, and only have roughly a little bit over 10% of what the ultimate dollar amount risk would be. Now, that's exciting. Now, the other thing that can get even more exciting about buying an at-the-money call option is that as the stock goes your way, the delta increases. So what's fun about that is that if it goes your way and the delta is increasing as the stock is going your way, it's like buying more stock as the market's going your way without taking any more money out of your pocket. What's more exciting than that? I don't know, quite frankly. So those are the advantages of buying a call option over simply buying the stock itself. Now, of course, there's disadvantages that go with that. And of course, the main disadvantage that goes along with just simply buying a call option instead of buying the stock itself is time decay. If we're going 3 months out on this call option that I'm buying, then after 3 months, if the stock doesn't move, I'm out $300. And I'm out $300 on something that didn't even go against me. It just didn't move. So I have time decay working against me, and that's not a good thing. The other disadvantage is that volatility could, in theory, work against me. And that if, let's say, maybe the stock goes up to $51 or $52 and volatility drops, the stock could go my way and volatility could go against me, and I could end up losing money on a stock that I was right about. In honor of the Viceroy being on the show, one thing that he always said that has always stuck with me through the years has always been, you can be right on the underlying's movement and wrong on volatility and still lose money. You can be right on volatility and wrong on the movement of the underlying and still make money. Now, notice I didn't say you will, I said you can, big difference, but that's something that needs to be factored in when making a decision as to what strategy with which you can go with. So now with that, the other disadvantage of buying a call option instead of just buying the stock is that you won't get tick for tick movement. So in other words, if the stock goes from 50 to 51 the first day you're in this call option, you're not going to get $100 in gain like you would on buying the stock. You're going to get whatever the option tells you it's going to give you, quite frankly. There's many different factors of option pricing. So with that, you have volatility as a factor, you have time decay as a factor, you have movement of the underlying as a factor. You have to have an understanding of all of these things, which if you don't, well, go to Option Pit and learn more about it there, or listen to any of the other 999 episodes of this show or the other plethora of shows on this network, or go to the new subscription service for Options Insider Plus or Options Insider Pro to learn more about that type of thing. So you have to have an understanding of that. So with all that being said, those are advantages and disadvantages, but the final disadvantage that I want to mention is one that a lot of people run into with buying calls instead of stocks, and that's over leveraging themselves. I can spend $5,000 on buying 100 shares of XYZ stock at 50. I can buy one call option for $300. Well, what do I do with the other 4,700? Well, what the heck? You only live once, so why not? Let's just load it up and let's buy a 15 lot and let's put $4,500 to work in this. And then if the stock just moves from 51 to 56, I am making some serious cash here, more than I could ever make with the stock. Well, we know where this is going to end. If the stock does go down in value, even a little bit, or just stays the same, then you're taking on a major risk for all the reasons I described. You can be out $4,500 for a stock not moving, whereas you're break even had you just bought the stock. Over leverage is the biggest problem when buying premium, in my opinion. And that is step one of today's strategy block on what do I do with XYZ stock if I'm bullish on it and I just bought a call option. What are some other ideas of what we could do with XYZ stock?
I like this idea of this kind of handoff strategy block. Since you invoked him, and since the Viceroy is probably to blame for much of your subsequent career in the world of options, Mr. Uncle Mike, for better and for worse, we will toss to him next. It is fun. We haven't had the Viceroy chime in on a strategy block in quite some time. Mr. Viceroy, what are your thoughts? Are you ashamed or excited to be to blame for the subsequent career of Uncle Mike here? And then B, what are your thoughts to some of your favorite alternative ways to get bullish on an underlying using options, sir?
Well, first of all, I just want to remind Mike how handsome and clever he is. And thanks for the mention. This is one of the greatest discussion in options because lots and lots of retail people have been told only fools buy options. And then they come back with, I could have sold a put, I could have sold a put spread, I could have bought a call ratio spread, I could do all these things. And that's the great thing about having a lot of option guys together and putting them in a position where you say enhance on what the last person did. First of all, call buying is a real viable strategy. And if you look at some of the enormous sums of money that have been made options trading, sometimes it's as simple as buying a call or buying a put. Sometimes you can overcomplicate it. But there's one thing I want to point out. stock has time erosion too. And this is something that most investors don't factor in. If I buy $100 stock today and it pays no dividends, and a year from now I sell it at 100, have I lost money? Everybody says, "Nah, you broke even, you're fine." Really? Lend me $100 for a year for nothing. Okay, there's time erosion in stock as well, except it doesn't get factored in. And worse yet, it's not a tax deduction, whereas the option premium is. So the options are more efficient for a lot of reasons. But what are some of the other things you could have done? You could have bought a call spread, depending on what your targets were of the stock. So bought an at the money call and sold an out of the money call. And in essence, probably wiped out the entire time premium that's in the spread. So that's one thing to consider. You can sell puts, but selling puts is great if you have a memory that doesn't go back more than about the life of an average fly. Okay, I mean, I was there when people's lives were destroyed by put selling, and I've seen it a few times in my career, and everybody assumes it won't happen to me. That's an old one. It's history. Just you wait. But buying a call spread, buying a call ratio spread, but now you've got an uncovered option. By the way, I like call ratio spreads far better than I like covered call writing. But again, the industry loves to promote covered call writing because, quote unquote, it's covered, it's simple. And then you say, well, it's the parity of an uncovered put. You say, well, let's get past that. Sometimes simple is the best solution. And if you really like the stock, or you've done some research and the chart pattern is good, the industry is on an uptick, they're well suited for, a number of things, spend some money on call premium, right? If you want to mitigate the money you spend and you really like the stock, sure, sell a put spread. The dynamics are different. The payoff is different. It's still a bullish trade, but you put 50 option experts in a room, you'll get 50 different ways to do that. But as Mike so clearly pointed out, sometimes the simple solution is the best. Most option customers, when I worked at exchanges and we got the feedback, most option customers start out by buying calls. And the experience can be very mixed to poor because, as Mike pointed out, you need to overcome a lot of things. It's got to go up over break even. You got to buy the right option. And by the way, that's a bag full of what makes the right option. And the quote Mike used is a quote that I still use about every 2 days. If you're right about the underlying, but wrong about volatility, you will underperform. If you're right about volatility and wrong about the underlying, you will outperform, right? And I've actually seen people make money, stock goes down, but the vol goes up, right? In October of 87, this is arcane trivia. What group of investors using options lost the most money? I'm going to answer the question. Everybody's going to say put sellers. They had the most pain and the most litigation, but the group of investors that lost the most money on a dollar basis were the covered call writers, because their stocks went down and their options either stayed the same or went up. So good job, Mike. You can enhance it forever, but what Mike did is a great way to begin thinking about getting into the options business.
There you go, sir. And I know, Mr. Last Emperor, you've been chomping at the bit as well. It's been a while since you've had a chance to do a strategy block as well. So what new wrinkles can you bring to our kind of rolling strategy block about ways to get bullish on a stock? And if you have anything else you want to add in there, have at it, sir. So let me do that. Oh, I'm sorry.
No, that's fine, Vicer. Go for it.
Sure. So I'll be real quick. Number one, if you're going to hedge something and you can only hedge out 70 or 80% of the risk, take it. Because hedging out 70% of the risk is a lot better than not hedging. What are the two biggest lies in investing? I'm hedged and I'm perfectly hedged. Look to other markets for hedging. This is my experience now on the institutional side. We have a concentrated stock position that doesn't trade options. Doesn't trade options in its home market. There's no index in its home market that's representative, but yet we have a huge concentration, right? So how do we hedge? Say, let's look at the core business and let's see if there are future/commodity products.
Oh no. It's like Mr. Viceroy forgot to pay his internet bill as well. We'll get him back. But now, Mr. Last Emperor, sir, I know you've been waiting patiently. You're dying, you're champing at the bit there to get in on the strategy block. What are your thoughts on ways you can get bullish using options, and also anything else you want to throw in there? Have at it, sir.
Yeah, I definitely am a big proponent, obviously, of evaluating the current implied volatility environment to decide what bullish strategy I want to do. So, something that both of the guys obviously have been talking to very astutely here. It's interesting. Someone much smarter and more experienced than me once said that trading is a regret business, right? If I buy something and it does exactly what I expected it to do, which is go higher, I regret not buying more. If I buy something and the underlying goes down in price, I regret buying it. So I'm thinking about premium buying in a similar way. So I want to make sure that the price that I am paying for the option as it stands right now to exhibit that bullish outlook matches what I actually believe will happen to the underlying security, right? So we on the strategy desk are proponents of, kind of trying to eliminate this regret theory, this psychological, conundrum that we all deal with. And the best way to do that is to come up with a plan. So you have to have a 3-part plan. What is the underlying going to do? Up, down, sideways, right? How long do you think it's going to take in order for that outlook to transpire? And most importantly, what do you think is going to happen to implied volatility? Based on where implied volatility is right now, we cannot foresee the future, obviously, but we could probably project what our thoughts are going to be based on what implied volatility has done historically. So my thinking here, and I want to just introduce this concept of vertical volatility skew, which is a fancy way of saying that there is a difference in the prices of options on each of the opposite side for equidistant options that are available on the board, right? So the idea here is the market participants' behavior of what they do in the market actually drives volatility. So if option traders are primarily engaging in option buying activity that drives up demand for options, implied volatility goes higher. Well, if we start looking at out-of-the-money options, in a lot of cases, what we will see is that there is a skew. So in volatility terms, which, by the way, implied volatility is an output, obviously, out of the marketplace. And so if the implied volatility is much higher for out-of-the-money options on the call side that you're looking at, and that environment exists, by selling calls against the ones that you're buying, it might actually make more sense, right? In an environment where there's call skew and it's in your favor. Conversely, of course, if you're doing, put spreads, and as Mr. Viceroy again pointed out that he was actually trading in the markets in 1987, I just read about it, right, in the book and studied them. You kind of think back to options being introduced on OAX and SPX in 83, and then what transpired in 1987, how intensely the market fell and how broad the sell-off was. Obviously, since that date, market participants have started reflecting their expectations of risks for market declines very differently. So if I'm doing something bullish neutral on an index, I am probably going to be observing put volatility skew, where the one that I am selling, the closer to the money strike, is going to be cheaper in volatility terms than the one that I am buying. And so what does that mean? What does that do to you? Well, it decreases your returns for every strike, right, that you go further out with, meaning you have increased marginal risks for lower rewards. And, one of the common things that I see, guys, and you can chime in and talk to me about, what you have seen over the years, is people don't pay attention to skew, or they don't think about it, but it truly does affect the strategy selection part. So if you're doing spreads and you're in a bullish environment and something is, about to hit brand new all-time highs, and you're thinking about participating in that market by being bullish neutral and doing, selling bull put spreads, and there is a significant put volatility skew, what ends up happening is, well, you know what? I'm not really getting paid for, the distance between the strikes as I would normally expect if I am, doing a spread at, with the width of the strikes of what I'm normally used to. So, I don't know why that is. Maybe what I'll do is I'll go ahead and, bring down the strike that I am buying to a lower strike, right? In other words, expand the spread. Or I'll do more, right? In the position size that I'm normally comfortable with. It's a slippery slope. You need to evaluate what's going on. It's not that we can personally, as retail traders, affect the implied volatility skew, but you need to be aware of it. And so if you are aware of it, you're picking the appropriate strategy that fits, both, again, on the direction, on time that you think that is going to require to actually play out, and on what the implied volatility environment is like, not just on the average aggregated basis, but also on the vertical skew piece of it.
Well said, sir. And it wouldn't be what'd you guys call it? OB1K. Does sound like a droid, you're right. OB1K without some of you folks on as well. So let's wrap it up. A little bit of your mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. You guys know the drill by now. Done it, 999 times before. I appreciate all of you hitting us up with the well wishes and the congrats on 1,000. You guys are awesome. We appreciate all of you out there. You guys are literally the reason that we do this. Glad to see so many of you are having fun looking and checking out the new offerings. Again, like I said, this is just the beginning. It's really going to get even cooler as time goes on. But I wanted to put it out there to you guys first, and gals, the hardest of the hardcore in our audience, give you pride of place, give you guys a chance to win the cool swag stuff first before the masses, before the legions get a hold of it out there. So if you haven't done already, get over there at theoptionsinsider.com/shop before the end of the show. Have some fun over there. All right. Speaking of folks having fun, Tony Weber in the chat, he's got a couple of questions. Regular listener. He says, first off, can you buy the swag direct? I tried to search the Pro Wrestling Tees store. I did not see any. No, you cannot buy it yet. I said we're kind of in the process. They're still working on the design over there. So our store is not live over there. When it is live, it'll also be linked on our theoptionsinsider.com/shop section as well. So you'll be able to find it there. And the stuff I'm talking about today, this network founder stuff, this is only for the people who are signing up in this launch window. So if you're signing up now, you get this. Otherwise, you can't get it. So it's going to be exclusive. We want to make it cool for the folks who are there from the beginning, who have been listening to us and supporting us all these years. We love you all. We want to give something cool back. So that's what we're doing, something exclusive, something cool. We'll have other cool stuff out there for you folks to buy. Don't you worry. You can play along there as well in terms of swag and gear and cool stuff. But for this one, the stuff that says the network founder, so folks know how cool you are, then that's exclusive to this. And the store is not live anyway. You can't find it there. All right. He has another question. He says, a comment, I guess. He says, this program is symbiotically good for the hosts as well as the listeners. Yes, it is. You're right. He says, hosts get new clients, I almost had the option block trifecta. He puts in parentheses, option pit YouTube, TOSAW's investments. Oh, there you go. And a Fidelity 401k. You're right. You had all of it. All you need to do is maybe trade some Nadex and maybe hit up the Viceroy for some options advice, and you'd be perfect over there. He says, listeners get toilet paper for life. Yes, that's right. I forgot about the toilet paper for life. Courtesy of yes, our Amazon. That was our March Madness prize. You won money. You could use it for whatever you want, listeners. And we joked that you could use it for toilet paper for life, if so inclined. Very short lifespan, but nonetheless, it worked. World Wrestling History Lessons and how to say aluminium. Yes, indeed. Good stuff. We also had a poll this past week, kind of getting to what some of the crazy red is on the screen. At least it was coming into today's session, bouncing today. But we saw some annihilation in the crypto space over the course of the past few days. In particular, we had Bitcoin getting down to pretty low. I think it was like 31,200 somewhere in that. Yeah, 31,248 in the last 24 or 48 hours. So that's down from about 65,000 listeners at its high in mid-April. So cut quite a bit. ETH hit 1739 yesterday. That's down from 4,500 out there. So some red on the screen. Obviously today it's bouncing a little bit. I believe ETH back above 2,000, and I do believe Bitcoin around 36, 37,000, something in that range. That was a couple hours ago when I last checked, so who knows how much has moved since then. But still, crazy stuff afoot. We asked you guys at the beginning of last week, what are you feeling about this space? And partly we all know it's Uncle Mike's fault. He's been talking down crypto for a while. He kind of really set off this massive sell-off in crypto ever since he started slamming it. But we asked you guys, a lot of red on the screen in crypto land, courtesy of our friend Uncle Mike. Is this a momentary blip or a sign of things to come? Quite simply, if you could buy a 10% out of the money call expiring end of the year and one underlying right now in the crypto space, which one would it be? Gave you Bitcoin, gave you ETH, gave you Doge, and the infamous other. A lot of you guys chimed in with a bunch of other ones, Shiba Inu. A lot of XRP love, which got hammered pretty good as well this week as well, even though that's coming back as well. But ETH took it with 54.8% of the poll, followed by Bitcoin number 2, 21.4%, Doge number 3, 14.3%, and other number 4. Mr. Uncle Mike, how bad do you feel having now driven the crypto to new lows, sir?
I can't say I feel really bad, and can't say I really think I really had much of a part of it, quite honestly. But I would say, if you're a short-term trader, then it might not be a bad idea to buy some crypto, but I don't know. I'm not really putting any serious money where my mouth is on that. So with that, I think in the short term, if you're a buy the dip person, then you can't really ask for too much more of a dip than, I think it was at like 60,000 down to 30,000. Then you might not be in a bad spot right now if you're a believer in it for the short term. I think one of my favorite things I've seen on social media, I believe it was maybe about a week ago when Bitcoin had its big drop, is that thousands and thousands of Bitcoin traders just became Bitcoin investors today. I thought that was very true. So those are my thoughts on it.
Very true indeed. We also had just some interesting nuggets, and a lot of our listeners are into crypto. We didn't get a chance to do a crypto rundown today, so this is kind of like a stealth crypto rundown here on OB1K. But we had Russell Rhodes of Vol fame and infamy on the VolView show last week, and he put out some interesting data he's been looking at from the crypto space, just of how many corrections there have been, particularly for Bitcoin. He's looking at Bitcoin here, and what the correction date started at, the recovery date, and how many days it took to recover, and the drawdown from the high. And it goes all the way back to 2010, which is obviously the early days of the crypto space. And they've had multiple long periods of sell-off. Back in July of 2010, it took 78 days to recover, dropped 38% from the high. In December of 2010, it dropped over 23 days, 31%. We saw, and that's how long it took to recover from that drop. In 2011, it dropped 38%, took 28 days to recover. And then in 2011 again to 2013, 618 days. And that was a 93% drawdown from the high. So that's a long run there. And then 2013 also saw throughout that year a 70% drop from the highs, took 207 days to recover. And then, of course, the infamous, well, not quite at the infamous crypto winter yet, because then December of 2013, we had a drawdown all the way through to February of 2017, 84%, took 1,175 days to recover. And then the one probably most of you are familiar with, December 24th, 2017, which kind of corresponds with the launch of CME and SIBO Bitcoin futures. That's when the worm kind of first turned against Bitcoin. Took all the way through till pretty much past the election of last year, November of 2020. 1,072 days for Bitcoin to recover. Its sell-off was 83%. Remember when we launched our crypto rundown program in January 2019, Bitcoin was around 3,000 and change. People thought we were nuts launching a show. They said this asset class was a fad. It's dead. So for those of you who are looking at crypto, and I know it's very short term these days, it might benefit you to look at this table and just check out this data, give you a little bit longer term perspective on all of this madness out here. Speaking of which, Bicyclist chiming in, he says, it's a bloodbath in crypto. In the last 30 days, Bitcoin is down 33% and ETH is down over 50%. Yes, you are correct, Mr. I like your handle, Bicyclist. Out here. Let's see. We got time for, let's do some quick ones here. Let's go to Jason. Jason says, hello. Well, hello, Jason. I listen regularly. You guys do great work. Well, thank you. I'm grateful for you. Well, grateful for you as well. He says, I don't think I've heard an episode on either one, your recommended options screeners and screening strategies, or two, your recommended options prop firms. Have you ever done episodes or written articles on these topics? If not, do you have recommendations on them? Or can you refer me to material you trust on these topics? We touched on this, I think, on our bootcamp show as well recently. That's a subject I want to get back to, the screeners. I want to kind of do a run through of all the, not just what we use here on the network, which is kind of some of the premium stuff, the trade alerts and live ball, other things you have to pay for, but also what's available for you folks for free on all the different major brokerage platforms, and kind of do a bit of a rundown of what we like, what we don't like on those different platforms, and kind of give you a little bit of guidance if you're looking to screen, as well as, what would be good criteria for screening. Dare I say it? Maybe that might be good for one of the new upcoming pro podcast. Might be kind of cool. Maybe we'll do that. So all kinds of fun stuff going on with that here. And the prop firms, you have to give us more info on what you mean by recommended. Are you looking for a job at a prop firm? If you are, that's a different perspective than it was when we got into this business a while ago, when the prop firms, which were called market making firms back then, were many and plenty. Not so many anymore, but there are a few big ones out here. I don't know. Maybe we'll start with the Fidelity guys, because you guys have a lot of screeners. What do you guys offer from a screener perspective over there at Fidelity? And what would you recommend for Jason in terms of what criteria he should be using when he's setting up his option screeners? And if you have anything on the prop firms, have at it. But I'm more interested in the screeners, gentlemen.
Certainly. I would definitely encourage maybe for him to sign up for a couple of our tool demos and see what we provide. Obviously, we have some pre-built screeners here at Fidelity when it comes to options trading. Things that are quite basic. Obviously, high options volume, exploding, floating, implied volatilities, order flow. The different types of covered call performances, for example, or cash covered put performances on individual underlyings. Those are some of the pre-built ones that are going to help you navigate in terms of what's on the move, what's actually happening. Then, of course, we have the customizability feature for it for you to be able to create the criteria in accordance with what you care about. I would highly encourage attending our coaching sessions, and it's not a direct plug. It's just something that you would want to be aware of because the functionality is quite vast. In my opinion, obviously, you want to be screening for things like underlying liquidity. So the security that you're going to be trading options on, you want liquidity to be present, because that, at the end of the day, the spread between the bid and ask is the true cost of doing business today as a retail investor when you're trading options. So liquidity of the underlying, how do I scan for liquidity? Is there liquidity in the option space? The tightness of the bid-offer spread. For different, minimal levels of open interest, maybe current levels of implied volatility percentile, dependent on what strategies you're thinking about implementing. Obviously, these criteria are going to be tweaked in different ways. So that would be my recommendation. But we definitely have a lot to offer. Come join us.
Unfortunately, listeners, that music means you can no longer join us, at least on this OB1K episode. We could keep going, but I don't want to kill these guys, making them talk for 3 hours already. It's challenging enough. But again, I want to reiterate what I said at the top of the show. We appreciate all of you folks out there. You guys are literally the reasons that we do all of this. So we love you all. Thanks for making this show what it has been for 1,000 episodes. And let's keep going around the horn. Let's start with the uncleest of Mike. So Uncle Mike, you've been on with me for literally 1,000 episodes. It's crazy to say that. Over the time, we've seen you evolve from Know Your Options Inc. to RCM, now to your own baby over there at St. Charles Wealth Management. So what do you want to leave our audience with as they look back on this crazy, tumultuous 1,000-plus episode period? And then B, if folks for some reason are in our audience and they aren't reaching out to you yet, where should they go? What should they do?
Well, I mean, this show has been a ton of fun for me. I don't know if I've done 1,000 of anything in my life. And so, I mean, the fact that I've done 1,000 episodes of this show, I mean, I wasn't on every episode, of course, but I was on a vast majority of them. But it's just been a lot of fun. And it's, you know, you're truly blessed when you can do what you love what you do, and you look forward to doing it every day. And this show is a major part of it for me. And if you would like to look for a financial advisor who is not afraid of the option product, there's a couple ways you can find me. Feel free to follow me on Twitter at Mike TOSAW, TOSAW. Check out my website, stcharleswealth.com. And I'll be more than happy to have a conversation with anybody, as I've had with quite a few people that are listening to this show. And very grateful for everything this show's done for me through the years, both through my livelihood and my financial management practice. Like I said, on a personal level as well, like I talked about at the beginning of the show. So the message I want to leave with everybody, a very, very heartfelt thank you.
Well said, sir. I love our listeners. They're very creative. I saw right now, regular listener, Revon Gorgeous, put out very graphically skilled audience we have, putting out a GIF. He says, this is the crypto rundown in one image. Actually, technically it's 4. But it's Homer. I do believe that's the Doge eyes. Everyone's talking about the light up Doge eyes. He's got the light up laser Doge eyes. Then he slowly retreats. The next picture, he slowly retreats into a bush. Then the third image is you can just see the eyes. And the fourth image, he has emerged. And he has a McDonald's hat on, so clearly he works at McDonald's now. So things not going well for him with the laser Doge eyes. But you know who doesn't like himself in crypto? It's the Viceroy. Mr. Viceroy, sir, again, I appreciate you being on with us on this 1,000 episode. Spectacular. We had a great run there. Looking forward to having you back sometime in the future. If you want to leave our audience with any thoughts, any words of wisdom on this momentous milestone, and just some fun inspiration and wisdom to leave them with, sir, have at it. The floor is yours.
Well, first of all, Mark, thank you. This was great fun. And as you mentioned, it's been years since I've done it. And I live in a world of a lot less red tape, so it's even more fun. In terms of listener guidance, a lot of what Konstantin said is something listeners should take to heart. The brokerage houses spend a lot of money on providing good tools. And I think sometimes because things are free, people think they're not, of value. The brokerage house tools, I mean, I worked for 5 years pretty much on a tool that we had initial success with that truthfully, I don't even know if it's still in use anymore. But raw options data in and of itself isn't always that valuable. You need to dig down a layer. And brokerage house tools, again, what Konstantin described sounds like an outstanding tool. Don't look for the cheapest firm. Look for the firm that fits your needs, provides tools you want, quality execution, good support. Boy, support's become a real issue in the free environment, and people's reputation is made on support. But be an informed options investor, and don't be afraid to dip your toe in the water of options when you have an idea. And maybe if it means buying a $100 call or buying a $100 put or doing a covered right or an overwrite. Also realize that a lot of what's on the internet is trash. It's just trash. We do some recruiting on the internet, and I live on a couple sites, and I have rarely interviewed a person who hadn't totally misrepresented their abilities and performance. So be aware the internet is a great place to hide and lie. And before you buy a service, I'm not talking about data analysis now, but before you buy a service, be real careful.
Well said, Mr. Viceroy. Advice we've given you from day one here on this network. Mr. Viceroy, great having you on. We look forward to having you on again soon, sir.
I would love to do it, and reach out and we'll figure out how we can do an exchange. I have cases of SIBO stuff. I'd love to give some of this to you so you can use it in your new effort. It sounds brilliant.
Thank you for that, sir. Always about giving back to the members and the listeners out here. And last but not least, we have our dynamic duo from the land of Fidelity. Let's start with the song of Ice and Fire. Sir, if there's any words of wisdom you want to leave our audience with here until we can get you back on again, at least, have at it, sir. The floor is yours.
Thanks. So, there's already been a lot of great things already been stated, especially with how in-depth the tools can get. They do, on the surface, they may look very simplistic, but when you start getting your hands dirty with the tools, there's much more there. And that's why my colleagues on the trading strategists like Konstantin, obviously the last emperor is a superstar for us. So we really appreciate him. They run those educational classes virtual online that doesn't cost you any money, right? It's part of the service available to you. So this allows you the opportunity to make yourself, as the Viceroy said, a more informed option trader, because I can't tell you how important that really is. So take that time, learn as much as you can so you can get to that area you're comfortable to make that first trade, and then learn from those mistakes. You're not going to win on every trade. I've already tested that out, and I've broken that several times over. You're going to have losing trades, and that's okay. We learn from those trades and move on. So that's why it's important to have that game plan. So certainly reach out to us here at Fidelity, not only from an educational standpoint, but for if you have any questions or anything that we can help out, we're here.
There you go. And last but not least, appropriately enough, because he is the last emperor, Mr. Last Emperor, anything you want to add to that? And then if folks are intrigued, they want to see what you folks have cooking on the options front over there at Fidelity, where should they go? What should they do?
Absolutely. First of all, I just wanted to say the fact that, the internet broke your store on the first day of you mentioning it is a very good sign.
It's a good omen, I suppose, yes.
Congratulations. Good omen. Congratulations on that. I definitely wish you guys all the best. I continue to listen to you quite frequently, maybe not every single week, but I try to plug in once in a while and listen to the discussion, because the discussion is truly stellar. I would also encourage all of the listeners who are still, who stayed until the very end. I would recommend that you stay humble. You continue to learn every single day. Someone earlier on the episode mentioned that the only thing that's constant about the options market, it seems, is change, and that is 100% true. I have been with Fidelity since 2013 and have been expanding my horizons quite a bit. But I can tell you that I still learn every single day, and that's what keeps me going. So I would encourage everyone to dip their toe in the water if they want to know more about what Fidelity provides on the education side. You can join us at fidelity.com/coaching and fidelity.com/classroom to sign up for small classroom education sessions that we do every single day. We appreciate you having us on the show, Mark.
Happy to have you guys back on. Check them out over there, fidelity.com/coaching. Great place to go to get some very hands-on information in the world of options. And on behalf of the Last Emperor and the Song of Ice and Fire, Mr. Rich, and the Viceroy and Uncle Mike, and the Greasiest of Meatballs, and the Rock Lobster, and everyone else who's been on with us over the course of these past 1,000 episodes. It's crazy. It's just insane to say it out loud. On behalf of all of them, again, I want to thank all of you for tuning in these 10 plus years, or if you're in the latter portion of that, you're newer, we love you all. Keep coming back. We got more great stuff coming at you throughout the rest of this week, obviously. And check out theoptionsinsider.com/shop. I'm really curious to see what you folks want from the Options Insider Plus and the Options Insider Pro. It's really going to be determined by you folks, what you want to see on there. So get over there, have at it. I think those folks out there who got them are going to enjoy those cool crates, but there's more cool stuff to come. Don't worry. This is literally just the beginning. So stay tuned for that. I'm really excited. This is kind of a new wrinkle, a new area for us. This allows us to do a lot of cool things, like go back into our archives and put together collections of things you guys love, like, topics and things otherwise would have been prohibitively expensive and time consuming for us to do that. But now we can through this function. This opens a lot of cool doors for us. We're really excited for us. Check it out. theoptionsinsider.com/shop. Let us know what you think. We'll see you back here rest of this week for our other episodes, and then back again on Thursday for Option Block 1001.
The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search the Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike TOSAW from KnowYourOptionsInc.com, and John Grigas from Options Express.
All right, and welcome to this inaugural episode of the Option Block, a veritable sneak peek, if you will. I know a lot of our listeners on the Options Insider Radio Network wrote into us to say how much they enjoyed the steady stream of content we put out from the Options Industry Conference over the summer. And that nice steady stream of content actually allowed us to take a bit of a hiatus from live shows, which we were able to put towards some interesting new content ideas for our listeners. This is actually one of those new content ideas. It's a new program on the Options Insider Radio Network that we are calling the Option Block. And it allows us to bring in a few extra voices to the network. You don't have to listen to me drone on about the options market anymore. We actually have a few other hosts in here to help shoulder the hosting duties. And I'll introduce them for you right now, starting with Mike TOSAW from Know Your Options. Mike, welcome to the program. And why don't you give us a little bit of your background in the options business, as well as what you guys do over at Know Your Options.
Oh, well, thank you, Mark. It's great to be here, as always. I work at Know Your Options, and what we do is we help people with either investing their money for them, or we work with people one-on-one as registered reps to help them to help themselves, so to speak. My background, I've been in the business for about 8 years, and before coming to Know Your Options, I was the Director of Education over at Options Express.
Okay, great. We're also joined by Mark Sebastian from OptionPit.com, as well as ExpiringMonthly.com. And Mark, welcome to the show. And the same question for you. Tell our listeners a little bit of your background in the options business, as well as what you guys do over at OptionPit and Expiring Monthly.
Well, I am a former market maker on both the CBOE and the American Stock Exchange. What OptionPit does, OptionPit is a full-service education firm meant to help self-directed traders learn to manage risk, pick trades, understand volatility the way all the market makers out there understand volatility. We try and take the individual investor that really wants to learn how to self-trade and get them to the next level. Expiring Monthly, which is kind of a sister company, if you will, is the combination of myself and 4 other relatively well-known option bloggers across the internet. We get together and we write a monthly magazine about what's going on in the option universe at that point in time. For instance, last month we wrote about the weekly options. This month we're talking about directional plays. On a side note, I also do a risk management for a small hedge fund, and I'm kind of published all over the country. Currently, I'm a staff writer for TheStreet.com as well. So,
last but certainly not least, we have the rotating chair from Options Express, the Options Express Fellowship, so to speak. And today that is filled by John Grigas. So, John, welcome to the show. And same question for you. Give us a little bit of your background in the options business and what it is that you do over at Options Express.
Well, thanks, Mark, for having me in. Quick side note, good choice of music on the intro. I just wanted to say that you have a great taste in music. Really got me pumped up.
We had some great advisors on our musical selections. I will just say that much.
I could tell right away. My name's John Grigas. I've been in the markets for about the last 15 years. I held positions from a runner all the way up to a floor trader and off-floor trader in pretty much every position in between. Currently, I am heading up the trade desk at Options Express. We oversee about 20 different licensed brokers. If you are not familiar with Options Express, it's the leading online stock, options, and futures broker. Pretty much a one-stop shop for retail clients.
And now that the intros are over, we can get into the meat of the show, starting with our first segment, the trading block.
The trading block.
Now, welcome to the trading block. This is where we break down the current market activity that we're seeing. And right now, today is a little bit interesting. Wasn't too much going on this morning. The market was kind of vacillating around a bit, a little bit lower. Now it's inching a bit higher. We had some conflicting news coming out of Philly Fed, where they said the economy was decent, but not as good as people thought it was going to be, maybe. And then also FedEx disappointed last night. That weighed on us coming into the opening. And then, of course, everyone's kind of concerned these days over this posturing coming out of Washington about the Chinese currency fluctuations and how China was too slow to adjust their currency. So I think the market is a little bit spooked now that we're going to see some pushback from China regarding its currency. What are you guys seeing out there?
I'll tell you one thing that I noticed today is what seems to be one of the market's favored stocks that doesn't seem to want to go away. That's Apple. Apple is moving. What are you seeing in Apple today, Mr. Mark?
Well, it is up. It's up about $5.50, which is about 2%. And I'm looking at this paper flow, and it is one busy stock. You got people betting from all sides about which way this thing can go. And we're looking at a volatility of about, at-the-money volatility of about 28%. That's a pretty hefty move. That's a pretty hefty vol for a $275 stock. Now, Apple's certainly been higher in the past, but just looking right now, this thing is, there is players all over the field.
Yeah, because we're getting close to that 279 mark, the 52-week.
That's what I was looking at. I mean, that's the highest it's been, $4 away.
Yep. So we're seeing guys that are betting it's going to be breaking through, and we're seeing guys that are betting it's going to be tanking. Some interesting spreads I'm looking at. We had a guy, looks like we had a pretty decent-sized trade. Somebody selling the 230, 270 call spread, which is kind of an interesting trade. And then a couple of really interesting, looking at some 270, 280 buyers out there. People that maybe don't want to go out and buy the stock, but are willing to bet that this thing goes higher.
Yeah, these are all Jans. Yeah, these are all Jan. The 270, 230 looked like it was a Jan spread. It looks like we're seeing some substantial options volume in Apple today. You know, their average daily volume is about 260,000 contracts, and they've already put up 330 with still a half hour left to go. So we're seeing a decent surge in the options contracts. The bulk of that appears to be call volume, with about 200,000 calls going up, and as well as about 125,000 puts. So yeah, substantial volume on both sides. But I'm looking here, and I agree with Mark. I don't see any massive one individual trade that's taking up the bulk of that volume. It seems to be players across the board.
Yep, they're seeing the call volume's 1.6 to 1. So we are seeing people, despite it running up near its high, out there buying puts. Although I have to say, we have a net delta. There's been a net delta buy of about the put delta has been pretty even, and we've had a net buyer in terms of delta of about 815,000 deltas. So it's kind of interesting.
I just want to go on record here. A couple of years ago, I was on a show, probably about the end of 2008, and they asked me for some picks, and I picked Apple down at like 88 or 90. And both of the hosts of the show I was on looked at me like I was insane. This was the height of the implosion, and they both looked at me and said, "Who the hell is going to buy these premium-priced computers now? This thing's going to 50." And so I just want to come on the record and say, yes, I was right 2 years ago. And and so I just I want to dig up that tape just to kind of mock those hosts now. Yeah. But it's one of those. That's one of those ones that goes unheralded. But yeah, this stock here this has been one of our favorites on the Options Insider. People write into us just about every day with questions and trade ideas and post in our forums about Apple. A lot of action on the weeklies.
Well, I'm just looking at, I thought I was messing around with Apple here, and I kind of noticed an interesting play. The thing I like about Apple is that everybody loves it, which makes me want to sell it. But you can only not always just on Apple. I feel like Apple's like the Prius of stocks. Like I see Priuses driving around, and I'm like, come on, really, Leonardo DiCaprio, really? But I'm really afraid to just go out and get short or to buy puts or anything like that. So what I was looking at that's kind of interesting is some sort of ratio spread. And what do you guys think about this? All right, if you think Apple's going to tank, but you don't want to just go out and buy puts, you sell the 280 puts one time, and you go out on a ratio, you buy 2 of the 260 puts. Now, I don't know about you guys, but I think if Apple heads back to 260, it's going to get there in a hurry. In which case, you'll see kind of an increase in volatility. These puts will do really, really, really well. And you don't mind losing on a little bit of the long delta from the 280s because you'll make up so much from the gamma from the 280 puts and the volatility increase. Now, if I'm wrong, which I've been known to do, it happens. Hey, you know what? It happens every once in a while. Sun shines.
I assume you're talking October here, right?
I'm looking at October. You can sell the 280 puts at about $10.40. You can buy 2 of the 260 puts for $6.30. Net credit of $4. Okay, so you end up with if we rally, you can make 400, and if we fall off, who knows how much you could make with vol increasing. But just kind of looking at scenario, if we're a week from now, which would be the 23rd, and we're trading at $259, we'll say $259 through the 260 strike, which would be a drop, but nothing ridiculous. What is that? That would be less than 5%. Okay, and we see an increase in volatility of 2%. Now let's raise the vol a little more here. Let's say we see an increase in vol of 5%. You're starting to make money already. And then if this thing goes to $250, you're going to be up a significant portion without having really risked a lot of capital, is what I like. It's kind of a win-win.
It's an interesting trade, and it's interesting too. It's not really as it doesn't have much of a delta component as you would think. I think the 1/2 ratio pretty much it makes it like a 10 delta or something like that. So it's a pretty directionally almost neutral trade as well till you get a really big move down to the 260 level.
Yeah, exactly. So who knows?
I do have to agree with Mark. One thing rare than Mark being wrong in his trades is that I agree with him in the fact that I believe Apple is a marketing firm that sells subpar products. I mean, hey, look, we got video phone now. Okay, everyone else has had it for 5 years, but the way they package it, their marketing, their music, America's pretty fickle. They buy into that pretty easily, and obviously have been buying their products.
Yeah, I personally have been on the bearish tinge for Apple for a while now. I actually finally got out of the gilded prison of iPhone just about a month ago, and I jumped ship to the Droid X, and I am loving Android and all the freedom that it allows.
I got rid of my iPhone in July, and I am also a Android user. So
I've been thinking. I was waiting to see if iPhone came to Verizon, but you guys just like Android flat out better, huh?
Well, I like a phone that can actually make a call from time to time, and our listeners who aren't in Chicago may not be familiar with this, but in Chicago, the iPhone is pretty much a brick when anything beyond data. And so for me, after being 2 years of having just an unusable phone with me, I decided that anything that had a connection was better, and let alone something that actually can get data. And now we're seeing Android handsets are catching up. If you add up all the different handsets running that operating system, is surpassing Apple on a daily activation rate.
Yeah, and speaking of Android, this brings up and I know that we're still talking market. Research in Motion has earnings coming out in about 10 minutes. Okay. So I thought, they're another company that is heavily involved in the smartphone technology. Sadly, they kind of turned into the General Motors of smartphones. Whereas they're slow, they're the establishment, they're the biggest market share, but they're not coming up with newer, more innovative technologies. Although BlackBerry Messenger is supposedly, my wife loves BlackBerry Messenger, but it's supposedly a really they're losing a lot of ground, similar to the way General Motors was in the 80s and 90s. And they have earnings coming out in about 5 minutes. I thought it might be interesting. Do you guys want to chit-chat a little about what paper we've seen in RIM?
Poor RIM, they were the leader in this, and maybe you were down there as well, Mark, I don't know, but I remember when RIM launched their pit back on the SIBO, and it was the place to be. People were fighting to get in there. That was the new kind of dawning realm of the PDA at the time, and they were the leader in it. And now they've since just been eclipsed. And the new thing they just came out with, I forgot what they call it, the Torch, which is kind of a hybrid BlackBerry / iPhone, is tanking. No one is buying the thing, and so I probably wouldn't be surprised to see these earnings be pretty bad. And it looks like the market is kind of agreeing. The stock's about $46.70 right now, and there's still a $1.25 bid for these SEP 45 puts that have 1 day to go. So
yeah, I know. Well,
it's definitely an overnight play without a doubt.
Exactly.
Oh yeah, I mean this is an incredible play. The thing that I've been interested in, and this is why, I'll tell you, they're not going out of business tomorrow, and somebody may want to buy them. You never know. And there's still some value in a company that makes some money, and sentiment has been so bad in this stock that the paper I'm seeing, and I'm going to get this out real quick, is the biggest trade we've seen has been a buyer of the September-October 50 call spread. He's been selling the September, buying the October. And what this is implying is that we're going to get right now RIM's trading about 46.65, up about $1.13. What they're basically betting is that RIM is going to rally 5%, a little more, maybe 10% at the most. And the volatility on the September 50 calls is going to get smoked. And the OCT 50s will come in, but not at the same rate as the September. And if this guy's right, you can buy the spread, the SEPOC spread, for about 95 cents. That spread would return, if we pinned 50, about 210 bucks, with a probably a real loss that you could lose of about $60. So it's a really interesting spread. Sentiment is so bad that I feel like the downside is not really that big of a risk, just because unless something abysmal comes out. And the upside is really where a lot of the paper is betting. So I'll be really interested to see what happens with this. But the volume on the SEP-AC 50 spread, they've traded the SEP-AC 50 spread 35,000 times. It is just unbelievable volume. Okay. And so I'll be really interested to see what happens. What do you guys have any thoughts?
What I think's neat about that with the earnings plays, you get 77 cents a premium for one night. Now, granted, the beauty of options is that you get to have your risk management in place, and you can do this with a smaller section of your portfolio. These are the types of trades that you put in the speculative section to where, like you said, Mark, there's not a lot of risk involved. In the next 2 days, the next 23 hours and 1 minute, so to speak, you get $80 in time premium for the September 50 calls, and that's something that can be very attractive. And if for some reason it doesn't work, then you're out $90 approximately plus commissions, and that's a very unique opportunity. And the other thing, you can do it to the downside as well.
Yep, that's always an interesting play, double calendar.
I agree with you guys, but I like the premium in here as well. I mean, what about the 47.5 strangle? Almost $3, $1.80 a premium. I mean, this thing, I know it's up $1 right now, but there's a lot of vol in there, a lot of premium for, like Mike said, 23 hours, 59 minutes. I think selling premium is the way to go.
Yeah, for our premium writers, this is looking like it's an opportunity from heaven for these guys. I mean, like you said, you can write these out of the money puts already for $1.30, and there's still some substantial bids in these SEP 45s.
Oh yeah. See, and that's my thought is that sentiment is so bad, and I don't think long term that this is a great stock, but sentiment is so bad that we may get a little bit of kind of a snap-up pullback if anything positive comes out at all. That's kind of what I'm looking at. So, but yeah, you're right. Long term, no thank you.
Then usually the trading block is a little bit more macro in nature, but today there's a lot of good stuff to dive into on a few hot trading names right now. And now we will continue that trend by moving on into the odd block.
The Odd Block.
This is the segment where we dive into some of the unusual options activity that we've been seeing today. And we did a little bit of that in the previous segment, but now we're going to go in a little more depth. Starting out with Williams Companies, Inc., ticker symbol WMB. This is a natural gas producer. And we're seeing one trader coming in looking to put on a pretty sized strangle in this stock. The stock's down about 4% today, around 1830. And looking at lower expected natural gas prices have been hitting their stock, with analysts cutting their forecasts. And we saw a trader come in today. He bought the 10,000 of the Jan 20 calls for 90 cents, and he also bought 10,000 of the Jan of the 17 half put for $1.10. So that net premium he paid of $2 for this Jan 2017 half strangle. So he's pretty much right around where the stock is trading right now at about 18.5. So he's got a little bit of break even. If stock's got to drop down to 15.5 on the downside, as well as up to about 22 for him to start breaking even on this trade. But he's listed as obviously someone who's expecting some significant movement in the natural gas area right now, with him putting some substantial premium behind that trade.
Okay, I was just going to say that it looks to me like on natural gas itself that overall implied volatility has remained somewhat steady recently. But on WMB, it looks like it's come down quite a bit from, earlier in April, probably about 20% on the overall implied volatility. So,
which has been very different from the implied volatility of your natural gas, Mike TOSAW.
Oh, I walked right into that one, didn't I?
That's why we don't record in the same room.
Just remember, I know the strangle very well there, Sebastian.
Well, speaking of strangle action, this is, I guess, the day for strangles. You saw another strangle going up in Conagra Foods, CAG. This is a company that makes stuff like Hebrew National hot dogs and Chef Boyardee and all those kind of canned processed foods we see up on the in the supermarket on a regular basis. And these guys are lighting up the unusual volume charts these days that they're after someone came in and sold again in January. January is the hot month. This guy sold a strangle in the Jan 2011. The stock right now is down to about $22. It's down about 2% after analysts cut their price target on the stock. And this strangle trader, he sold 2,000 Jan 24 calls for 30 cents, and he sold 2,000 of the Jan 21 puts for 70 cents for a nice round $1 worth of premium. And the stock's got to drop down to about below 21 or up to above 24 before expiration for him to really start feeling the pain on this trade. And again, we have the inverse situation to the previous trade where this trader obviously thinks that the processed food market isn't going anywhere anytime soon, at least not before January expiration. What do you guys think?
I mean, is it possible with that maybe he's combining this with a stock position? Like maybe he has a stock position and he's looking to add covered calls to it and then take on more premium, and by possibly trying to get a greater position in the stock by getting it put to him at the short put level.
It might be, sometimes if they were doing that, you might see them overweighting one leg or the other. This is a fairly even 2,000 contracts on each leg. So, I mean, it's possible, and that brings up a good point. In the options market, we never really know what the hell the other guy is up to. So it can be any one of these things. But we look at some of the more reasonable ones. But that's a good point. He could have some underlying equity position that gives him a vested interest in one leg of the strangle versus another.
It seems like a light volatility to sell. I don't, if this guy doesn't have something against it, I would, if I was involved with his trading firm, I would kind of ask him why he felt the need to sell something like this. It just seems too cheap to me. I don't think that the risk reward probably, in my opinion, just isn't there.
Yeah, I mean, go back to what we were just saying a few minutes ago, where front month at the money strangles that are far out of the money in RIM are trading for more than this, and this guy is selling Jan vol for it looks like it was in the high teens, that level. The implied vol on Conagra is up to about 21.5 right now after he sold this strangle. But I agree with you, it is a pretty light premium level to be hitting for 2,000 times.
Yeah, for all we know, he could have something against it. That, like you said, that's the thing about options. You never know exactly what the guy's trying to do. So,
and then the next name we have lighting up the charts is P.F. Chang's China Bistro, which is PFCB, and that's another one making me kind of hungry hearing that name coming up on the tape. But we had cake in our previous sessions, and now we have China Bistro. So we have a food theme. We just had Hebrew National. So I think we have a theme going to our unusual activity in the odd block. And we're seeing a lot of bearish traders lighting up the tape in P.F. Chang's today. They're diving into these put options. The stock is down about 8.5%, at least it was in the morning, down to about 43.5%. And looks like the traders are loading up. What's interesting about this is they're loading up on SEP puts. They were loading up on the SEP 45 puts, which at the time when they were buying them were still out of the money puts. They were loading up at them for about 85 cents.
Think about this. If you get to move anything like today, you probably could go out and buy the 45 puts on the cheap, even at the absolute lows. Where were those 45 puts trading today? Somebody came in and bought a bunch of the 45 puts. Let me see here. Pulling up the time and sales on P.F. Chang's. They ran up to, 85 cents. They bought them on the low. They're probably regretting the purchase because those puts went out 15 at 30. So that just goes to show you about some of the foibles of expiration trading. You can think you've got something brilliant, but the gamma is so explosive the day before and the day of expiration that you buy something, it moves 80 cents on you, and you've lost more than 60% of your investment. So that would be something. That's kind of something I would advise a lot of would-be traders is, expiration trading is really difficult. It's really hard. most of these expiration trades lose, and especially if you're paying a decent premium for something that's out of the money, there are probably better plays that will not lose so much. You really have to understand the gamma effect on those puts if you're going to go out and buy them. So my guess is this guy got it pretty good today. So.
Well, that's the thing. A lot of people, it's like the temptation. You see that juicy premium for just one day, because after all, what's the worst that can happen in one day? What's the likelihood of that?
Rim trading at 48.70 right now. It's currently up $2.20 from the closing price. $2.40. So
there's that one day example.
just saying. Just saying.
That's the thing, and a lot of people miss that.
Right. Just saying I was right.
So it looks like whatever incremental news they put out was just enough to edge them to the upside. Of course, this is immediate post earnings, after hours vacillation. I wouldn't be surprised to see this bump around quite a bit before it settles into the actual range of where we're looking. But it looks like the immediate trend is to the upside a bit. Yeah.
Yeah. So
hey, those SEP 45 puts are looking really good.
49.5 for Rim.
Yep, this thing's on the march. So I'll be interested to see where it goes. My bet is that it right around in between $49 and $50 is where we open tomorrow, if I had to guess. Just based on the fact that just this 50 call spread was the most telling thing I've seen. I mean, it was unbelievable.
With that many 50s going up, you kind of have to pin at the 50 striker these days.
Yeah, I agree.
So
looks like it's weakening it up a bit now. Just hit 48.5. It just printed.
Yeah,
so it's vacillating all over the place.
Yeah, who knows where we're actually going to be? I mean, obviously we're going to run around. It's a volatile stock, but yeah, it's just kind of real interesting. So
it's another tip for the listeners that are looking to hedge some of their gamma in the after hours market, particularly after earnings, is you make sure you wait for it to settle in a bit, because you're going to get some crazy prints in the few minutes right after the announcement is made. And I've seen people get things, a couple dollars away from where the stock is actually trading on just some random errant prints. So if you're working positive gamma, that can be a good thing. If you're working negative gamma hedges, that could really come into to bite you.
More often than not, one of the things, I would agree with you. If you're working a long gamma, getting that offer in there, they can't print through you. So if they're going to really run that thing up, you're going to get a nice fill on it. You can really get a nice trade there if things run up.
Well, we'll keep an eye on Rim while we run through some of the rest of the unusual activity we got going here. We saw Harley Davidson put up some interesting numbers these days too. The stock's trading about 28. The implied vol's up a little bit today, and we saw this thing trading about 20,000 contracts right into immediately a couple hours into the session, when this name usually prints about 6,000. So it's several times the average daily volume we're seeing going up. It was a 10-to-1 ratio of calls to puts, with the SEP 28 and OCT 29 31 calls going up the largest. The stock's been a little bit range bound lately, like the 22 to 28 range. So we're seeing the stock trading right now at the high end of that range. But we're seeing right now people are still coming in thinking this is a fairly decent bet and loading up on these variety of call strikes here, thinking that I guess they feel that the OCT vol is a decent buy here. We also saw some late-breaking trading here in some other names like Xerox, XRX. We saw some really size options volume out there today, with close to 100,000 options on the tape before even about 1 o'clock, this is a stock that normally puts up an average daily volume of about 6,000 contracts. So you're talking a 15 times increase in average daily volume. That is pretty much the definition of unusual activity right there. And we saw heavy interest in the calls, with about 90,000 calls going up versus 3,000 puts. The bulk of that in a Jan 7.5-9 call spread that traded 35,000 times for somewhere in the $1 to $1.05 range. And it looked kind of like they sold it, Mark. Is that what you're seeing on your numbers as well?
Yeah, well, what I saw, was they sold a call spread. And it wasn't just an outright sale, though. And this is why you have to look at the open interest. Unusual volume doesn't mean anything if, a big call sale means little if the guy is closing a position. All right? There's a big difference between opening and closing. Closing means the guy's basically done. Opening means, the guy is making his bet. What happened with the Xerox is that he was long the 7.5 calls. You'll notice the open interest almost exactly with the volume today, and then he rolled it up to the 9. So he got more bullish. He wanted to get more gamma, more bullish, and possibly lock in a little bit of a winner on this rally. So
our final name in the odd block for today is PFG, or Principal Financial Group. This is another one that put up some interesting, unusual numbers with about 30,000 contracts going up on the tape compared to an average daily volume of just about 2,300. Again, this was volume heavily weighted towards the calls, with nearly all of them, 29,400 of those contracts being calls. And it looked like the bulk of that was an OCK 25-27 call spread, put up at some interesting prices and some interesting splits on there. And I think, Mark, you had some more information on that one as well.
Yeah, I thought it was a, what, like, we're going to have him on, Charles Cottle, call a slingshot trade, where the stock has, made this guy some money. He wants to sell covered calls but doesn't want to kill his upside. So what does he do? The easiest way to sell covered calls but to not completely destroy your upside is to actually sell call spreads instead of selling calls. If you are long a stock and you want to sell covered calls against it, but don't want to give up the upside, of the complete upside, like your fear that the stock could really, really take off, then the best you could do is actually sell a call spread. So what you're risking is the space in between that call spread, less the credit that you take in. But if the stock really runs up, you're not limited on your upside. You can actually start making money again on your upside. It's a nice little hybrid to the standard covered call. And our friend Charles Cottle, that we're going to be having on, calls it a slingshot.
And that wraps up the odd block, and with that we will move into the spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures, and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
Okay, welcome to the Spread Block, and this is the segment of the show where we discuss some interesting customer activity that they're seeing over in the Options Express book. So with that, I will hand you over to John Grigas, and he will take it away. So, John, it's all yours.
Thanks again, Mark. Working at this trade desk here, we do get a lot of calls, and of course it's expiration, so we're fielding the expiration calls. But one thing in particular, because it is the triple witching tomorrow, we are getting a lot of calls on the ETF dividend. If you're unfamiliar with that, ETFs such as the SPY, the Diamonds, obviously the Quad Q, formerly known as the Triple Qs, XLU and XLE, they all trade ex-dividend tomorrow. And what that means for our option holders is you may have assignment risk and dividend risk. So what we're doing today, we're trying to reach out to these customers, because in some cases you could have a bull call spread or a debit spread on. Think you're safe, your short call may be slightly out of the money, and you're worried that do I have early assignment risk? Well, of course I don't, because I'm slightly out of the money. Or two, there's 10, 20, maybe even 30 cents a time premium in there. Well, with a dividend in the SPY of 57 cents, and people that want to take delivery, or they want this dividend, who are long the calls, we're going to receive hundreds, if not thousands, of exercise notices tonight. And what that means is that if you're short these calls, you're going to be early assigned. You're going to be responsible for that dividend. Well, you say, oh, hey, I own the call. I'm in a bull call spread or a credit spread, or I'll just exercise my long leg. Well, it's too late. These are going to trade ex-dividend tomorrow, and you'll be liable for that dividend amount.
And in some cases, it could be hundreds, if not thousands of dollars. So we're fielding a lot of calls on that. People that aren't calling in, we're trying to reach out to them. Options Express, we really put the customer's interests first. And we want to see them succeed, and we want them to be successful and grow with us. So we're reaching out to these customers, letting them know that they do have dividend risk. And what we're suggesting to do is either roll out to a different month, roll up to a different strike if they're short some calls and they're near in the money, or they're closing out their spreads entirely. Have you guys had any familiarity with this type of risk before?
I think that's a great point you bring up about dividend risk in ETFs, because ETF options are, definitely the hot thing. They've been growing exponentially, especially in the retail sector over the past couple of years. We see most of our users coming to us looking to trade any sort of commodity or whatever it might be, and they always choose ETFs, even the financials. But a lot of them are ignorant of some of these, mechanics and logistical details, like the fact that they are obligated for dividends on these ETF options. I think that's a great point to bring up for many of our listeners who are sitting at home right now, probably scratching their head saying, wow, I wonder if I have some dividends coming due on some of my ETF option positions. So maybe they'll be getting a call from you, John, in the near future.
Yeah, we sent out thousands of emails this morning. They've been calling all day to speak with a broker and learn what their risk is and learn how to manage their risk. I mean, the biggest thing about trading options is managing risk. Other calls that we're seeing today, again, like I said, expiration calls. We had a lot of people selling premium on Crocs last week. If you were unfamiliar with the move it had, late last week, stock was trading near $14. I think it ended a 2 or 3 day slide somewhere near $10. So you're looking at a 30% move in a stock. That makes rubber shoes. I can't imagine why they've sold off so much. I know years ago they were around $75, actually traded all the way down to $1. But a lot of people saw that premium again. It came in, sold premium, so now we're seeing them close it out for some decent profits.
We've heard the death knell sounded for Crocs so many times now that I'm kind of in almost inured to it now. It reminds me of back when I was in the SPX and when Yeltsin was running Russia, we'd hear the Yeltsin death call but every 3 days. This time Yeltsin's really dead. And Crocs, the same thing. Crocs has been all over the map. We actually have some special affinity for Crocs on the options inside. Not the shoes, I think they're terrible, but for the name, because it was one of our first really big, unusual activity spikes that really put our site on the map. We did some content on Crocs. This is years ago now. And then within the next day, we saw, thousands of people coming in reading that content. That really kind of helped kick off the Options Insider. So as much as I may hate those terrible rubber shoes, I have a special place in my heart for Crocs and their options activity. And yeah, they're back up to $11. Who would have thought they would still have life in them after all these whipsaws and swings?
Yeah, they do seem to be coming back. Another individual equity that we're getting a lot of calls on is Amazon. A lot of people in bull call spreads. This thing has been trending higher. Looking at it right now, I like to use the quote detail page on the Options Express platform. Kind of gives you a breakdown of all the important factors that are needed to make some quick decisions. We have earnings on there as well as fundamentals, dividend releases, and their amounts. But looking at Amazon, the trading. Let's see here, about
148.
148, so that would put them at, about $4 off their 52-week high? I'm looking at Amazon's 52-week high. So they're trading at 148, as Mark said. 52-week high of 151. I always, we talked about Apple earlier in the show, real close to their 52-week high. Most of these stocks, in my experience, like to test that 52-week high. You get all the way up here, you're going to put your head up there and see if there's any buy stops, anything you can trigger to push this thing higher. But a lot of our customers have been in bull call spreads, been doing well in this trade. I like it, free shipping. I don't own Amazon personally, but went over, talked to somebody that owned a Kindle, got to play around with it. I got a feeling that the Kindle itself is a big revenue for Amazon. Lightweight, holds 3,500 different books. Myself, I like to cozy up on the couch with a nice book by the fireplace every once in a while, but this does seem to be the future. Curious why that went with no comments, but
warm cocoa.
The Amazon discussion does feed back into the Apple discussion very nicely, actually, because these two are actually going toe-to-toe quite a bit over this past year, more so than they have in the past. Yeah, primarily with the Kindle. They've cut the price of the Kindle quite a bit now, and with Apple trying to position the iPad as an e-reader, Amazon is fighting back with drastic price cuts. In fact, I think just yesterday, a couple days ago, they came out with their first ever ad for the Kindle, and it targets the iPad directly. It has a guy going up to a woman in a pool and saying, "How are you reading that iPad, that device in the sunlight?" And she holds it up, and it's a Kindle, and I could read it in the sun. And the implication was that the iPad is a piece of crap because you can't read it in the sunlight. But I think Amazon's done one interesting thing, I think, with the Kindle and with a lot of their businesses, which I think is interesting to me, is that they've divided the teams. So there's a hardware team for the Kindle and a software team for the Kindle. And they're actually competing, which is actually a great way to run that business. The software team is allowed to make all the deals they can to promote that business, which is selling ebooks, even doing things like opening up an Amazon ebook store on the iPad, in iTunes. So you can get an app and buy them directly on the iPad. And you think that would hurt their hardware sales, but the hardware guys are coming out now and setting up deals to distribute the hardware in Best Buy. So by having two competing internal teams pushing that product line, it really seems to have helped them make them more efficient. They've got a price point that people seem to be happy with now and a feature set, and it seems to be holding its own toe-to-toe pretty well with the iPad. So these two stocks are probably going to move in lockstep a lot more often going down the road as they continue to snipe at each other over their tablet/e-readers.
Yeah, I mean, looking at the charts, Amazon and Apple, I mean, they look like an overlay. Similar moves. And back to that Kindle, I mean, 60 seconds to download a book, $10 a book, 3,500 books, all within, the palm of your hand. All this research that I have in front of me, I pulled right off the Options Express Research Center that streams all the, latest news in any particular security, Dow Jones Newswire, and a whole bunch of other content that you can use to find out why these stocks are making their move. We also include the S&P reports that you've heard me talk about in earlier segments or earlier shows. All information you need right at the tip of your hands to make that choice on what stock to get into. Besides those two securities and the ETFs dividend that is ex-dividend tomorrow, a lot of expiration questions. A lot of people like trade condors. What happens sometimes at expirations is that you find yourself in between those two strikes. Options Express provides a lot of assistance to new clients, new to online trading, maybe new to Options Express, or new to derivatives or options trading. We're getting fielding a lot of questions about what do I do tomorrow? How much time do I have? What's my best way to manage my risk in these type of spreads? But other than that, yeah, it's been expiration questions all week long.
Now, do they still give you free lunch on Expiration Friday over there?
They do, and they do it Monday morning as well, or Monday after expiration, which is usually our busiest day, because that's when you wake up Monday morning to think that your options expired worthless, and you're figuring out where you want to spend your premium that day when you realize, okay, that traded higher and I was assigned, and now I got to figure out what I got to do, and I got to call Options Express.
Oh, missed the free lunches though.
Hey, John, I have another question for you. Going back to that to the dividend trade tip for a second. We've seen a lot of smoke and fire over the whole dividend trade explosion in the options market over the past couple of years, and there's a lot of concern that it really is confusing the retail customer, particularly ones who are just coming into the option space. They're starting to learn how to use unusual activity and things like open interest to track trading in these underlyings, and then they see these massive explosions of essentially fake volume in these big dividend trades going up for millions of contracts at a time. So I'm curious if you're getting a lot of calls in the Options Express call center whenever these big trades go up. Are people confused? What do they have to do? Are they being assigned? Are you seeing a lot of impact from those, or is it pretty much a non-event for you guys?
Anytime that you see big open interest or big volume on a particular strike, we do get people, that keep their eye on certain securities will call in and say, hey, what are you hearing about, the 100,000 contracts that have gone up at the at-the-money calls on the SPY. And, we do see that on the quarterly dividends. And that's a great opportunity for us to explain to them, what this dividend play is and what their risks are.
Yeah, well, John, thank you very much for that insight into what's going on there on the Options Express customer side. And now we're going to move from the spread block right into the strategy block.
The strategy block.
And the strategy block is where we kind of break down some interesting trades or strategies that we feel might be relevant in the current market conditions or just might be feeding off a lot of the input we're seeing from our various constituencies at our websites. And Mike, I'm going to hand this to you for this one. What strategy shall we discuss today?
Well, what I'd like to talk about today is the covered call. With the market rally going as it has, there's a lot of covered call traders out there. The covered call is a very popular strategy. Not only for beginners, but for advanced option traders as well. And oftentimes when the covered call is pitched to people or when people first learn about it, they don't necessarily hear about what to do should the stock go in the money. So, for example, if you XYZ stock's at 50 and you sold the 55 call, maybe you got $1 for the call option you sold. You're excited because you're getting a 2% profit. And even if the stock does go up to 55, well, I'm still happy because I'm going to make a nice profit on it overall. But when the stock goes to 58 or 59 and you're realizing that you missed out on even more of the upside, questions come up about, well, what can I do? And what I want to go over today are some things with which you can do when your covered calls actually go in the money. The first choice that you have, and there's no right or wrong answer for this, you just need to be aware of what your choices are, and you need to have a plan going into the trade as to what would be the best method of doing it for your situation. First method is to just do nothing. If you sold an out-of-the-money covered call, if you sold an in-the-money or an at-the-money, your stock is above your maximum profit point. You're making the most amount of money that you could have possibly made in the trade to begin with. So by doing nothing, your covered call is in the money, and all you're waiting for basically is for expiration Friday to come. You're staring at the clock. It's like when you're in a football or a basketball game and it looks like you have the game wrapped up halfway through the fourth quarter. You're just trying to play things out, and hopefully the stock doesn't go down too much in the meantime. So that's one thing with which you can do. And once it's expiration Friday and the stock is in the money, you can just get called out and know that you made your maximum profit. Now, with that, understand that there'll be tax implications if this is not an IRA. That needs to be part of your plan. And also, you need to be aware of the fact that the stock will not be there over the weekend, so to speak. So if the stock does find the cure for cancer, or if they go bankrupt to the upside or to the downside, you need to be aware that the stock can move over the weekend without you being a part of it.
How do you go bankrupt to the upside? Just out of curiosity.
No, if they go bankrupt or... It's an either or. I thought I said that.
Now, no picking apart poor Mike over there.
Oh, yeah. No,
I still got my strangle ready for you, buddy.
I know.
Some other things you can do with it. I did a presentation a couple years back, and someone had asked me, well, I think it's more risky to stay in the covered call. And I said, well, it just kind of depends on what you're looking at. You can get out of the covered call early for a lesser profit. There will still be time decay left in that call option with which you sold, but the overall trade will be profitable overall, most likely. Unless there's some type of crazy volatility skew of some sort, you're going to be profitable. And there's no law that says you're not allowed to buy to close the short call and sell the stock all within one trade, and you can get out, and you don't have to worry about the downside stock risk. So you can get out early on a covered call going in the money. Now, another thing with which you can do, let's say that maybe you're just a little bit in the money and you think the stock maybe could go up a little bit higher. Perhaps you can buy to close the current month covered call and then sell to open one maybe 2 or 3 months out of the money, and it won't cost you anything to do so. Now, sometimes that works, sometimes it doesn't. You need to have a bullish stance in order to do that, and number two, you need to be ready for the risk of the stock going down in the time frame with which you plan on holding it. Now, let's say you go the route of getting called out and you actually are flat, but you still want to get back into the stock. Well, one thing that you can do is sell a cash-secured put. Now, beginners may or may not know this, but cash-secured puts and covered calls are really the exact same thing when it comes to risk and reward. By selling a cash-secured put, you're getting paid to take on the risk of that stock. It's the identical risk-reward of a covered call, and you can still get back into it. So the message with which I want to give from the strategy block for this week is that you have choices in terms of what you can do once a covered call goes in the money. With options, it's a very versatile thing, and that's why we think it's important that you know your options.
I like that. I like that. Well done. You know, the segues and the tosses are my job, but I'll let you have a few every now and then. But you know, Mike, I think that's important to mention too, because the conventional wisdom with covered call writing is that you write the call, the stock rallies, and you're happy because it rallied through your stock, and that's kind of it. You let it run away. But you know, the truth is there are a lot of different ways you can approach that. You don't have to just sit there and say, oh, maybe I'll do another trade, or I'll leave this one on until expiration. You can unwind part of it. You can roll it into different trades. So there's a lot of different opportunities for traders who think maybe, wow, I'm stuck here now. I've got this covered call on. And there's nothing else I could do.
You can convert it into a slingshot trade, like we were talking about with our friend that was trading PFG.
Yeah, exactly.
You know, there's 1,000 different things. Just because it blows through that short doesn't mean you're done. Okay, you can absolutely move along with the ride on that. Rim trading 50-35 right now.
You're just trying to rub in my upside comment, aren't you? But yeah, I think that's
I'm just trying to rub in the call spread that I bought at 1:30 this afternoon.
Oh, there you go. I guess lunch is on you next week. Yeah, I think the takeaway from that is exactly you're not done when the stock hits your short or blows through your short. You still have a lot of options, pun intended, that you can pursue without having to sit there and just be stuck through expiration. With that, I think we'll close up the strategy block this week, and we will move on to our final segment, which we call Around the Block.
Around the Block.
Around the Block is kind of like our What's Trading Week Ahead segment, where we look at some of the events that are coming up in the near future. One of the ones we've already covered live throughout the show, which is, of course, the RIM earnings announcement. And looks like that stock is still skewing to the upside after the event. So the market obviously happy with what RIM said. I guess the bankruptcy lookouts and the bears have to wait another day for RIM to fall into obsolescence.
Yeah, Mark, I don't mean to interrupt, but you just did get a margin call on your position, so you may want to take care of that.
Oh, no.
That's the nice thing about being on the phone with Options Express Live, is they can tell you that kind of stuff right away as your margin calls are coming in, and you can act accordingly. See, you know, that strangle, that 50-52-42 strangle is still looking pretty good, I think.
That still is. That's looking great, actually.
They're gonna peg that stock at $50 and a penny tomorrow. And that guy that wrote that calendar spread's gonna be looking great.
Exactly.
Oh yeah. Well, you know what it is that there's this guy. All these people came in and bought these calendar spreads. Who do you think is keeping this stock in that $50 range? All the jerks that bought the September calls that are trying to scalp the gamma on these calls. They are getting just absolutely worked over on this trade. It's unbelievable.
All this gamma hedging and gamma scalping is going to keep us right at 50 tomorrow. There's no way 35,000 of these 50 call spreads went up today, and we're not going to go out, like John said, at 50.01 or something stupid like that.
They're sitting, the New York Stock Exchange, or the NASDAQ is probably sitting on, 2.5 million shares offered at, 50-50, and 2.5 million shares bid 49.5. So, that'd be my bet.
Aside from the RIM upside explosion, what else are we looking at for the week ahead here?
We got home sales.
What home sales? Who's buying a house these days?
Not a lot of them, but they are coming up. Maybe one of these times we might get some good news at some point. Who knows?
You got core CPI tomorrow, which is always important for the your bond ETFs and your your interest rate complex if you're trading futures. You always got the hawk in there that thinks inflation. We need to raise rates, but it looks like inflation is more worried about deflation right now.
Yeah, and we've got. Don't forget, we've got. Hate the football team, love the sentiment. We got the Michigan confidence coming out tomorrow. Michigan Consumer Sentiment Survey coming out tomorrow at 9:55 Eastern Daylight Savings Time.
Now, how can you hate the football team with a quarterback like that this year?
Oh, yeah. No, they're the best. Rich Rodriguez, he's the man. I love him. So,
yeah. And of course, we still have these lingering questions over why the administration, particularly Geithner and those guys, have decided to raise the China currency issue now. I mean, China's been doing their own currency thing for a long time, and all of a sudden, Washington decided to bring it more into the public sector, which kind of leads to the for the political watchers out there, leads to the assumption that maybe they're going to start making this more of a public fight and try to pin some of their failure to restart the economy on China's currency moves. In which case, there's going to be a lot more public back and forth about currency and China in the near future. That might be hanging over the markets for the next few weeks as well.
Well, the good news for the Chinese is they own $1 trillion of our debt, so I don't think they really have a lot to worry about.
Yeah, they swing a pretty big stick when it comes to that.
Yeah, no kidding.
Well, guys, that's going to do it for our inaugural sneak peek episode of the Option Block. I hope our listeners and the Options Insider Radio Network enjoyed it, and I encourage you, if you did, to check out the various sites. If you want to know more about unusual activity, feel free to surf on over to theoptionsinsider.com. If you want to know more about Mike TOSAW and his in-the-money covered call strategies, surf on over to knowyouroptions.com. If you want to know more about what's going on over at Options Express, so Options Express is pretty easy to find at optionsexpress.com. And then, of course, Mark and his many various entities. We'll just toss the hat over to Option Pit right now. We'll rotate it on a weekly basis, and then
is the hub of all that is Mark Sebastian. So go to optionpit.com.
Well, that's about all we have for this episode, and we'll look forward to seeing you again in future episodes of the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.